Mic check, mic check.
Data. The underlying data is accurate. Put into a good taxonomy and ontology, then the model doesn't have a lot of value. And that's why we're seeing the value of these models all converge, because there's a good taxonomy and ontology. The internet is not a corpus of truth. It is a corpus of a lot of opinions and a lot of bad data. There's some truth in there, but it's hard to find sometimes. And so all these AI models are just based on the internet. They don't add a lot of value, which is why you can have a Chinese company, in a couple of years produce something that's just about as good as Grok, OpenAI, or Claude. And what that reveals is that these AI models, that layer of the AI stack, is more commodity than it is a panacea for profits.
All right. Good morning, everyone. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is Thursday, August the 13th. We've got about 5 minutes to go for the opening bell.
Maybe Apple or another large company buys them and takes them over and gives them a home where they can get distribution. Because the small business.
We have Sam Bottas and Diane King Hall. Some more beavers here on Wall Street. Opening bell will be right back. U.S. stock index futures pointing to the higher open. Kick off the morning with data and the decisions moving markets. Morning trade live that breaks down the macro moves and driving the price action from Fed policy to global growth to inflation prints and geopolitical.
Headline PPI was unchanged. Futures are higher.
Trade live where the markets meet weekdays at 10 a.m. Eastern.
Final demand for goods was down 0.7%, led lower by 31% or 3.1% decline in energy prices, including a 5.7% plunge in gasoline for July. Final demand services for PPI rose 0.2%, 0.2%, boosted notably by a 6.5% jump in portfolio management prices, while transportation and warehousing services fell 1.8%. Final demand construction advanced by 2.2%. If you've been listening to Mondo, you know he's really busy. Let's see, SK Hynix. Let's take a look at SK Hynix. That's higher. Cerberus, not so good. SKHY. Maybe we'll catch a bid in Cerberus. All right, so here is SK Hynix trying to get back to the highs from yesterday. I'm looking for a move up to 170. I have the 170 call for March of 27. Okay, SK Hynix is moving higher. It's currently trading 154, more or less. Okay, Google is up. Let's see what Google's got a lot of work to do. Google's got a lot of work to do to get back above the 50-day. Tesla looking for a pop. SpaceX a little bit lower, trying to break higher. We get up to about 155. I might unload my SpaceX for now. Just feels like the S&P is experiencing some rotation up here, maybe some distribution. All depends on if we can take out 7,800, of course. Futures are moving higher. Let's take a look at hedge flows setting up for this morning. Okay, 0-day, we've got 77.50, 77.75, and 7,800.
which also rallied last night. Also giving tab to the report now that basically the Japanese government is given the BOJ that Japan is flexing now with respect to supporting near-term interest rate hikes here. So this could potentially be in the September to October meeting here, according to Bloomberg. Basically, this is all because of the.
What do you need, Missy? What's the matter? What do you need? Yeah. And we're open. That was quick. All right, let's see. Futures immediately getting some selling here. Futures. Okay, futures are fading right off the highs. Little profit taking. Snowflake. New York Fangs mixed at the moment. Got Google and Amazon down. Tesla trying to forge a bit higher. S&P fading from the high. Looking for a bounce. Looking for 7,800 to get tested. Seeing some stats about VIX. Whenever VIX hits a low in July, a new 150-day low after July, and like it did yesterday, the August to end of year returns are positive 85% of the time, with the median August through December return of 8.1%. So that's just a stat. We have to see how things work out. August is typically one of the worst months of the year for the markets, and yet we're trading near all-time highs. So stats are just that. They're stats. We had Cerberus getting kicked to the curb last night, Cerberus. So we'll see if we get a bid here. Cerberus is turning the corner really quickly here. Cerberus, nice pop.
Around financials in any way. I've asked a number of people who've been in the meetings. Will they talk about valuation? Absolutely not. They talk.
Yeah, AI as well, David. AI, big change in the markets, composure, composition. Okay, Intel. All right, there goes Palantir. Palantir trying to break out. Palantir strong start. Okay, let me just post what the top 5 look like, top 10.
Right now, let's call it maybe early to mid-October. Seems to be people's best guess, but we don't know. And again, this $2 trillion number is not a number from the company. I read the headline. Like everybody, I read the headline. Right. Okay. All right. Well,
Somebody was trading the Qs big yesterday, looking for more upside into November, December. All right, futures reversing. What do you need, Missy? What's the matter? That's not good? Okay. All right, shorts had the cover real quick there, S&P. Cerberus looks like shorts covering, people taking profits on the dip. Tesla's on the move. Tesla's starting to move. Microsoft reversing. Tesla got some work to do. It's holding this trend though. Tesla's holding a trend. So they keep talking about, what is it, OpenAI? What's Anthropic? Which is the one that hasn't had an offering yet? Okay, S&P on the move.
The construction of data centers and then everything you put in them, which obviously is
Okay, Meta having a nice little pop here. Meta.
a better, more cheaper way.
Okay, it's got the 50-day overhead, 50-day overhead, Meta, Tesla, Apple having a nice little bounce here. Apple. Okay, maybe we'll get a little bounce here. Any bounce at this point, any short dated options, I'd be taking profits off. If you can manage to pull some profits from short-term trades, most of my options are out September or later in the year. Hertz looking good. I'm looking for that to get above 3. There goes SK Hynix. Rocket Lab, RKLB.
Yeah, I don't like hyperscaler. And I mean, people don't know what it means. What it means is trying to throw people like you off. Well, yeah, a lot of the wording is used to basically put up a wall and try to. But can I tell you that this morning?
Rocket Lab's looking for 90. Okay.
Which we don't talk about. I was just going to mention it. It's 502. I mean, that's an all-time high on Dell this morning. How about Michael Dell's son? I mean, there must be something in the Dell water.
Adam Dell. That's Adam Dell? Don't know. I'm sure he's a very nice fellow.
Very nice.
Michael is
How about
very
SK Hynix breaking out.
great song. What was your best album? Tapestry.
Today.
SK Hynix breaking out.
Jim, that's going to take you back to maybe late January.
Rocket Lab's still going. Here's SK Hynix. Okay, looks good. SPY on the move. Okay, these put flies, they're just protection at this point. Love to see the markets much, much higher. Okay. Rocket Lab, big bounce off of the 200-day, 50 days overhead. Rocket Lab. Nvidia's on the move. Okay.
I'm looking at a press release from Tom O'Brien.
So I did sell Nvidia yesterday. I didn't get back into it. Nvidia.
Yeah, they're buying a company called Accelerant. And how much is it worth now?
Intel turning. Palantir. Where did Palantir go? Okay, Palantir, a little dip after the open. SK Hynix looks good. Nvidia, SKHY, SK Hynix. I have the 170 call for March, looking for this to break to the upside. Okay, so we're starting to look at the next level, which is right here. You sound so sad. What's the matter, kitty cat? Hmm? What's the matter? SK Hynix looking good. Okay, Apple is up. Apple looking good. Apple looking better.
Yeah. Stock had its incredible move.
Microsoft. SK Hynix. Microsoft looking good. Tech is bid. CoreWeave is back to the high that it saw yesterday and above. CoreWeave continuation. All right, let's see what CBRS is doing. CBRS should see some sympathetic buying here. CBRS looking for that to rally. Netflix yesterday showed some strength. Okay, breaking above the 50-day. Netflix is about to break out. Okay, that looks good. Netflix about to extend this bullish rally. Looks good. Netflix. For those of you in Netflix, I'm in Netflix. Got longer dated calls. What's Oracle doing? Oracle's up 2.5%. Okay, Oracle looking good. Oracle looking good. Oracle trending above its 50-day now. Okay, S&P's at the highs. Let's see what happens here. We got Trace. We got 7,800, 7,810. Okay, Broadcom looking good after being off yesterday. Broadcom, Meta looks good. Tesla, giving you an opportunity. Okay. Faber getting annoyed with Kramer. It takes so long. All right, SpaceX. All right, that's drifting a bit lower. SpaceX, SK Hynix looking good. Oracle. Okay, so we're looking for the pre-market highs to be bought here. Oracle, let's see, Oracle. Oracle acts very squirrely, tends to fade. We'll see if that character changes. Like Microsoft for the longest time would fade any moves, any bullish moves, it would fade over here. Back in June, earlier in the year, just couldn't get a bid in Microsoft. Now we're up here, looking really good. Microsoft following through. Okay, S&P looks like it wants to bounce here. S&P. Okay, let's look at the S&P. Cerebras continues to have a bid, so this is maybe it saves some of these people that you went too far out of the money. Let's see what the Qs look like. The Qs are breaking higher. Qs are about to break out here. I don't know what money has on the Qs. I haven't looked at it. Qs. Qs are about to go.
If you do at some point have Tesla and others producing a billion robots a year, here's the thing that are going to need to be trained. They're going to need to be trained to do specific tasks, and that takes
Big pivot level here. SKUU. Ooh. That looks really good. 2230. SKUU Granite shares long. SK Hynix looks good. $22.08, $24.04. That looks really good, Ursel. Okay, we got 317 stocks advancing. NIMO positive. Okay, Core 1M is still drifting below 7. So people are chasing calls. Let's see. We've got 331 stocks advancing. Stocks advancing. There goes Intel. Intel popping. Intel going here. Wow, there goes Intel. Oracle going. Oracle looking very strong here. Oracle. Oracle's kicking butt. Netflix too. Now that they're above the 50-day. Okay, let me see about Intel. Do I have time on Intel? IWM, I sold some put credits yesterday on IWM. Okay, looking for that to be higher. Okay, new all-time highs, IWM. IWM, new all-time highs.
Downward sloping red trend line there. Our green trend line was broken as well, though, but it does seem like the bulls are reasserting themselves now in terms of momentum. We can also see our volume profile study shows that we had a node between about 290 to 297 here. We have put beyond the trading activity that we have to follow here, so we're kind of in uncertain waters. But now we can see that if we were to pull back, that stands out as an area of potential support based on the heavier trading activity here about 296, 297. So finally, our expected picture here shows that for the August 21st monthly options expiration here, 8 days out, plus or minus about 1.9%. So matching up with some of the lower boundaries that we saw after a gap to the upside and our recent relative lows near that 298 level.
Thank you for that. Good look there at the small caps chart. Let's update our trading and get the very latest. Our market data panel is here and ready. Alex coming in and market. Taking a look at this market. Alex, I'll start with the AI trade. We saw some of the techniques under pressure, like this note reverse. But yesterday, really took off after a few of the earnings that we talked about yesterday morning. What are we thinking about the AI trade here?
Okay, New York Fang looks really good. Looks bullish.
As the hyperscaler names started to recover and close the gap in performance between, what I would call the AI infrastructure trade. Some of that was due to the AI infrastructure trade pulling back quite substantially over the last 3 months after a really, really strong start to this year. All that to be said, what we're starting to see now is those AI chip makers and the AI infrastructure names sort of reassert dominance on this marketplace. You see that today. You see names like Micron making big moves. You see names like Marvell making big moves. What you see when we chart the AI chip makers versus the hyperscalers, after a brief period of time earlier in this week, where on the last 3 months, the AI hyperscalers outperformed the chip makers. The chip makers have now took the lead once again. They're up about 3% over the last 3 months, where the AI hyperscalers are down about 1%. But the biggest takeaway to me is that both of these trades are relatively flat, and they do continue to trade with a somewhat inverse correlation. So something to watch into the rest of the year.
It's actually watching some headlines pertaining to the Cisco CEO and the hyperscalers. And Cisco, of course, after its earnings right now, is down about 7%, even though it had an earnings revenue beat and a record revenue. But he did say that he expected growth to continue in the hyperscalers going forward, meaningfully higher. And so I thought that was notable to add in there. Ben, some of your thoughts on energy as oil is back today, right now at 81.08 a barrel.
Yeah, and oil, Nicole, has been one of those more volatile areas. We've seen the up and down with crude. That's leading perhaps to a look to maybe that midstream component of the energy complex, which, if you want to think about it, it's the pipelines, it's the distribution terminals, it's the trucking companies and those contracts that are longer term, that are really independent of that crude oil price. And so you look at a company like, for instance, Sunoco Limited Partners, SUN is the symbol here, and I've got it charted on a comparison line relative to crude oil. Crude is that purple line. on the chart, you can see that crude goes up, crude goes down, and Sunoco generally moving higher here because they're negotiating, and again, those longer term contracts where they've got to move product. Remember, we had the EIA telling us that inventories were building and demand was dropping, and yet this a company like this in that midstream space is still maintaining their pricing pressure and their revenue stream, and they're coming off of their pretty significant earnings peak.
Okay, let's turn our attention over to the VIX. It's been a bit more tame lately. What's some of your thoughts on volatility? What is it telling you?
Yeah, one of the things that we've noticed over the last quarter plus has been there's a lot going on under the surface.
All right, IWM, just watching SK Hynix. Okay, we're at the highs right now. Netflix, pushing a bit higher, Netflix.
Recently, but VIX made a new low year to date.
Okay, Netflix looking really good.
The VIX one day is 6.7.
Point. I mean, the banks kind of top out around $1,000, but there were several you can kind of get in that mid $500 range, and they've been very clear that they want to kind of stay in that kind of price, but not really not go too far above it and sort of press the limit because they feel like this is kind of the sweet spot. We can get sort of younger people who maybe don't have a lot of disposable income but are willing to splurge, and then as those younger people age and their income levels go up, they'll still be loyal to the coach brand.
And noting how far it's fallen here over the course of the trading day, down 15%, with the company expecting to buy back 1.35 billion in stock, a 16% increase to the dividend. What does that tell you just about the stock direction?
Well, I mean, we should point out, I mean, their EPS is good, but a lot of the EPS, particularly their EPS forecast, is kind of that buyback. I mean, you strip out that buyback, the EPS growth looks a lot worse, and that's a big part of the concern as well. They've done a good job in holding margins, and Joanna Glulovsat, the CEO, she's talked a lot about cost discipline. It's something they're very clear about doing, and investors have rewarded them for that. And again, when you look at them stacked up against other publicly traded retail fashion companies, they're still doing well. But you see the reaction there in the shares today. I mean, this is setting up to probably be the worst day that they've had, at least going back to actually about a year ago.
Yeah.
When they reported earnings, and their earnings got hit because of
I got to take a 2-minute break. I'll be right back.
Remain Boston, thank you very much.
Okay, Netflix seeing a little profit taking. S&P still moving higher. S&P breaking out to new all-time highs. Wow. Wow, 7,800. That was quick. Gosh, I really hate these freaking games that they keep advertising on Bloomberg, no less. They're preying on the people who can least afford to play these stupid games. And it's like bombarded. Where do these come from? All right, whatever. Markets look good. All the New York Fangs are higher. That's giving us a nice heads up confirmation. Okay, looks like we're going to break out again. The S&P 500 breaking to new highs. Looking good. I personally have too many open option positions. I need to start shifting back towards holding shares mostly and selling covered calls, etc. As the markets start to break out. We need a trend. Options don't fare very well in sideways chop, so this is good to see. Give us an opportunity to reduce our exposure to short-term options. Even options that I have out in September and October, I'm going to reassess them, make sure that they're still valid. Cerebrus, not a good day for Cerebrus. SOXL is up, looking good. What's my expiration? January, okay. SOXL is a good example. I'd rather have shares of SOXL and be selling premium instead of owning premium. All right. It's just a preference. Now that we're starting to get out of this risky sideways chop. The issue with what we're dealing with right now is Core 1M just has been staying right around 8. Okay, S&P continuation. Wait, did we miss something here? I'm looking at the news. I don't see anything that suggests this type of breakout. All right, S&P at the highs here. IWM back to the highs. Hedge flows. 99 percentiles right there. Likely slows things down. Okay, 99%. Okay, 78.10. What do you want, kitty cat? Hmm? What do you want? Ah. All right, so this looks pretty good. Got 78.10, 99 percentile level. We're up at the highs. Maybe take some profits off. Let's see. SK Hynix hanging out. Looks good at 159 and change. SK Hynix opening range. Looking for the opening range breakout. And SK Hynix. SKHY. We're at the opening range. We're above the pre-market high. We had this issue with NVIDIA yesterday. Showed strength and then it faded. Showed strength again, faded again. Got it stopped out or took the trade off twice. And then it wound up rallying this morning. Meta looks good. SK Hynix. 70. Let's see what EWY looks like. South Korea. I mean, two stocks, Samsung and SK Hynix, make up the majority of the weight of the Korea Kospi index. It is moving higher. So both Samsung, let's see, Samsung, what is the Samsung Electronics? Looks good. SKHY. Looking good. Now we need to get above 162.65. You can trade SKUU like some of our members are trading. SKUU, the 2 times shares, goes for 20 bucks, 23, 22.50. Presently, looks pretty good. It's above the 60-minute 20 EMA. That's a check. Rocket Lab yesterday, moving above its 20 EMA on the 60-minute. Now it needs to start trending. Rocket Lab. Okay. SK Hynix. All the New York Fangs look good. There goes Apple. Apple on the move. Apple is on the move. Okay, I got 307.50 calls for Apple. Got $2 to go there. Microsoft looking good. Do I have any Microsoft? I think I sold all my, I did sell all my Microsoft. Okay. So here's Apple. Trying to get back above the 60-minute 20 EMA. That's a big plus if it does. Microsoft, of course, back above its 60-minute 20 EMA. Palantir, back above its 60-minute 20 EMA. looks good. ARM holdings back above his 20 EMA. Watch ARM. Okay, ARM Holdings looks good. Western Digital, that was been active lately, back above its 20 EMA. A lot of stocks back above their 20 EMAs on the 60-minute. Intel is trending a bit. Let's see, what options do I have on Intel? This is another example of something I need to exit. Okay, I got rid of Intel, it looks like. All right, so I'm no longer in Intel. Options, I'd like to buy shares and sell covered calls on Intel. Okay. SpaceX, what's SpaceX doing? SpaceX still drifting lower down to 140. SpaceX, okay, so it is trending. It's just a little extended. Looking for a bounce, S&P 500. Okay, so we had the sideways consolidation. We're breaking out to new all-time highs. 78.10 is a big level. Doesn't mean we have to stop there. Okay, for the record, we don't have to stop there. 99 percentiles. These are 99%. Okay, hedge flows are starting to show signs of slowing down a little bit. Shake Shack back. Shake Shack back to profitable. Shake Shack bought this about a week ago. I guess Josh Brown was talking about it. That was that big day. Back to a profit on Shake Shack. Looking good, Shake Shack. Okay, Rocket Lab looking good. Looking for a follow through with Rocket Lab. SK Hynix trying to break higher above its opening range high. Watching SK Hynix. Okay, we want to see opening range breakout signals. Airbnb continuation. Airbnb after earnings. This is day 5. Very strong action in Airbnb. It broke out to 4-year highs. 4-year highs. You have to go back to 2022 to see these levels on Airbnb. Okay, so let's do that. Airbnb. Okay, go back on the weekly time frame. You can see back here in 24, we broke above 170. We broke above 170 recently. We pulled back there in 163. If we go out another couple of years, you can see over here, 2022 is the last time we were at this area. 180, 179, 180. Airbnb above that level, looking really sharp. Okay, looks like it's going to attack the all-time highs after IPO. Okay, that was the IPO high, 1994. $2020 IPO highs. 219, 220, 220. It's at 183 now. Airbnb looking good. Oh boy. Let's see. CBRS. Qs. Seven. Okay, Airbnb still going. Hertz on the move. Hertz looking really good. Headed for $3. Hertz. All right, the Qs look good. Airbnb at the highs. Looking for BNC pivots. A lot of these stocks moving higher. Don't chase it up here. Core 1M is telling you. Core 1M is telling you that people are chasing, which is a bad thing, because they will lift the prices of all of these options. If you're chasing, any pullbacks will hurt more than if you wait for a dip intraday. It's like Shake Shack is running right here. I would sell into strength and then wait for the next dip like it did earlier, right there where it dipped back to 73.40. Buying there, the implied volatility won't cut as much as it would if you bought at the high. So I'd be buying highs. I'd be buying the lows, the dips, and selling into strength. Okay, this is Shake Shack. Let's see, you're looking at MSTU. Let's look at the 60-minute. 196, 203, 215, 221. Shopify looking good. All right, so a lot of stocks up on the day. Good time to reduce your exposure so you're not looking at so many different positions. Okay, let's see the Qs. Whoops. Qs look good, breaking out. So quiet.
Oh, I want to say clarity. Yeah.
All right, S&P is still going here.
Maybe we'll get some sort of updates on the task forces because I always think about the.
All right, we're moving through resistance.
Should not launch task force.
So these 99 percentiles are getting run over.
On how they're working. Maybe he'll change a little bit of how he's viewing it and how he's communicating it, but we'll see.
Yeah, we will. Colin, good to see you. Thanks a lot. Appreciate it. Much more markets action coming up. We'll have some trendy tickers for you next.
Okay, IWM
Good night,
breaking out.
Good night, Pops.
SK Hynix still going.
Fancy espresso machine. Good night, keys to the sports car you spent years saving for. Good night, DSLR camera, vintage diving watch, and whatever that is. Apparently he knows. And good night, concerns about your stuff or anything that might happen to it. Because you bundled your renters and auto insurance with Progressive. The end. Oh, and good night, neighbor's dog.
Bank of America rising. Okay, Bank of America bought some call spreads yesterday. Trending. Let's see, Citigroup. Citigroup is trending about to break above these pivots here. I bought Citi over here back in July when the banks started reporting. Got caught in this downfall, but I had plenty of time, so that's one of the reasons why I like having. What options do I have here? I have, I believe, longer dated, like October, I believe. Citigroup. September. Okay, September, those are good. Citigroup, September. At the 145, so a little bit more out of this I need. Citigroup moving back up. Wells Fargo, all the banks look good. PNC, JP Morgan. PNC is breaking out of a squeeze. JP Morgan trending upper Bollinger Band. Bank of America have a position from the watch list running the upper bands. Goldman Sachs trying to get back above the 50-day. Morgan Stanley on the watch list breaking out of a squeeze, looking good. Okay, Shake Shack. Okay, that's trending, Shake Shack. The restaurants look good. Cheesecake trending up at the highs, still a profit taking. Cheesecake, Bloomin' Brands, BLMN. Eat, Brinker, that was up yesterday on earnings.
Have been falling this year, but
Jack in the Box.
A new report by Insurify shows premiums climbed.
McDonald's. Okay, McDonald's back above the 50-day. Should start to turn. What's Target doing? I haven't looked at Target in a while. Target at highs. Costco. Walmart. Okay, Walmart turned the corner. Dollar Tree. 5 below from the watch list. Breaking higher today. Okay, Netflix, a little profit taking at the highs. It is breaking the downtrend. Okay, so this should be good over the next few weeks, next few months. Netflix, Oracle, SK Hynix is really going now. SKHY.
Have increased 45%. In addition to that, the severity of accidents has remained high.
Oracle.
And on top of that, we see continuous
Oracle doing what it does. It hit the opening range high and just consolidating right now, but it looks good on the daily.
Where a lot of the carriers are seeing that repair costs and costs of parts are continuously increasing. Some of the states that we see that
okay, above the opening range breakout. Okay, here's A or B and B. Waiting for that pullback. Always the best. Always the best to wait for that pullback. SK Hynix. Okay, that's breaking out. You got opening range breakout signals. Looks good. I got the 170 call, so I'm looking for this to run up to that area. SK Hynix.
40-50% increases after COVID of car insurance rates. But it's good to see that the trend is not overwhelming across the United States.
Yeah, I was going to ask you, if you look pre-COVID to now, what's the overall increase?
So the overall increase is more than 50% across the board. In some cases, for a family with low budget, it could be 4 to 5 months of groceries.
And when you talk about the repair costs having gone up, is it, you mentioned tariffs, which obviously are pressure on some of those parts that people are getting put into their cars. Has there also been an increase in filing for repairs? Are people are accidents not just more severe, but happening more often? And people, obviously when you get in an accident, you can choose or not whether to file to get the repair done. What are all of those trends?
So unfortunately, the severity of accidents have continued to be very high. We saw a spike of the severity right after COVID, and everybody thought that this is just a post-COVID trend. And unfortunately, the severity of accidents have continued to stay stable. The way carriers across the board are adjusting for those increases of claims is that they are filing rate increases on a state by state level. And unfortunately, those rate increases would be very substantial or relatively small. And they're very much dependent on how carriers are trending from a loss ratio perspective. Unfortunately, across the board, as I mentioned, 32 states are seeing rate increases this year, anywhere from 4 to 5 to 15%.
One other thing that caught my eye in your report had to do with politics, which I was a little bit surprised about. 1/3 of drivers say auto insurance costs will play a role when deciding how to vote. To be perfectly honest, I was very confused by this. Do elections have anything to do with auto insurance rates?
Yes, so both auto and home insurance rates, and what we have noticed is that sometimes people are rushed to do auto insurance or home insurance. For example, if you are deciding on a major home with a mortgage, often people don't even understand that their rates might be increasing 20, 30, 40% year over year in some states, depending on their location. And the same applies for home for auto insurance. Often consumers do not understand the burden that they're taking based on their location, based on the zip code that they live in, with car insurance as well. So
But is car
yes.
insurance regulated on a state by state basis? Do they set the rates?
So car insurance is regulated on state by state level, and what we do see is that that users can save over $1,000 if they compare regularly. And what is driving the differences of regulations as well as of pricing is that carriers across the board are pricing risk differently. So the same exact consumer with exactly the same risk can be priced very differently. And sometimes people think that just because they're staying on the same insurance for 10 plus years, they're getting loyalty discounts. But the reality is that they might be saving $1,000 if they just shop. So sites like Insurify provide that apples to apples real-time experience.
Regina, thank you very much. Appreciate it.
Thank you. My pleasure.
Coming up, we'll take a look at some of today's trending tickers. That is next.
Chris, I didn't recognize you. You get a haircut. You look sharp. Ride shares. It can be a big trigger for you homeowners turning into their parents. So you've been doing this long? You seem great at it. And Chris, there's room behind you if you want to pass this turkey. Okay, let's let him drive. You do right. It's a lot.
Safe travels. Thank you. Good luck to you.
Yeah.
Great talking with you.
Chris can't save you for becoming your parents, but we can save you money if you want to.
Sure, you got another ride too. All right, go get it.
Hey, Bezos, Michael here. This is the Curiosity Box, a team and a community that designs, develops, and makes curiosities that go further than anything there is or ever has.
We quieren un show de Magoncho. Todas las emociones en un solo
SK Hynix continues. SK Hynix at the highs. Tesla breaking out.
Grocery inflation remains sticky with prices increasing.
Nvidia pushing higher. I didn't get back in Nvidia. That looks pretty good though. Nvidia. Chips looking good. Cerebras, CBRS. The Qs at the highs, the Qs.
Yeah, so the best way to think about us is on the one hand, we take the best elements of meal kits, and on the other hand, the best elements of fully prepared food. So you get our countertop oven, we send you food that is ready to cook, but the ingredients are mostly raw. But instead of asking you to chop and prep and do all the cooking and cleaning, we ask you to spend 1 minute preparing it. Add some spices, maybe add a little water. Then you scan a QR code on the oven. The oven downloads the cooking instructions from the cloud, so it cooks it exactly the way our chefs intend, using dry heat, wet heat, broil at different temperatures. And you get a
S&P starting to fade from the high now.
absolutely perfectly home cooked meal for 1 to 4 people, but with no work. So think of it as like
IWM.
When somebody buys into Robin today, David, how much are they eating?
Okay, pulling back a bit. IWM from all-time highs.
50-50 split?
People order about 6 meals per week on average, but they use the oven for their own food also. So you can use it as an air fryer, as a toaster oven, to make cookies, to make broccoli, to do a whole bunch of different things. So
The 10-year yield.
30 times per month. And every week, that's about 6 to 12 meals.
Pulling back. All right, so that's good for small caps and tech, especially small cap tech.
20% year-over-year meal deliveries.
Trying to grow their businesses, having to pay higher interest rates. This pulling back would be helpful.
Yeah, I think that's such a huge advantage.
Tesla looks good. Okay, the 10-year is pulling back. Or let's see what junk bonds look like. Junk bonds should be up today. Junk bonds should be up.
And what that translates to for our business is a much more retentive customer.
Junk bonds above the 50-day.
Kids, this decade or so struggled with really high churn. People would try it for a week, they would bargain hunt and discount shop and switch to some of the other ones, but rarely would they stay around. It's very different with the ball. Once someone buys the oven, puts it on their countertop, we own that real estate. People stick around for a long time. That's how we've been able to get to profitability. Been profitable now for almost 3 years, and hit the revenue numbers that we have.
Who's your typical customer, David? I'm curious.
Okay. The Qs.
Families and have you seen it evolve over time?
Yeah, it definitely, we appeal to a really wide spectrum of people. So the kind of target customer is a young, busy professional that lives in cities and wants to eat really great food, but is maybe tired of doing DoorDash every night. It's coming through the meal kits. But we also serve them as they
Okay, the Qs.
they have kids.
Looking good.
Nesters. We're a great solution for them too.
ATR is about $13.14.
Probably have been recent as we've launched a family product, so you can cook a meal for 4 people in the oven all at once. usually in 20 to 25 minutes. And so we're now serving families of 4 to 5 much better than we were for the first 6, 7 years of our company history.
And walk me through the business model, David. Like how much is the oven cost me? And now I assume
Okay, Microsoft, a little fade there.
Yeah, so we have 2 different
Tesla moving higher. Nvidia looks like it wants to break higher. SK Hynix, SKHY. Nice opening range breakout trade. Okay, you can see that the opening range breakout signals. Very strong volume.
Family meal, or if you get a meal with filet mignon, that might get you to $18, $19.
we're always looking for lines of sight into the consumer, David. You have that. How strong does the consumer look, just based on what you see in your business?
Yeah, super strong. Retention looks better than it really has in a very, very long time. So we haven't seen a slowdown in purchasing of meals from current customers or demand from new customers. We did raise price about a month ago on our meals. So it's the first time we've raised price in many years.
All right, SPY, new highs, S&P new highs.
Customer base. So
Tesla looks like it wants to keep going. Tesla.
Well priced as compared to many of the alternatives.
Tesla breaking above the opening range. No signal, but it is breaking above the opening range. I have December calls, got plenty of time. I would like to sell my Tesla and start buying TSLL shares on dips rather than options, just preference at the moment.
To do that requires a whole bunch of infrastructure behind the scenes, of which AI will certainly power a lot of that, especially as it pertains to what are the right selections for each individual.
David, great to have you on the show today. Thanks for your time.
The optical cable providers all looking pretty good. AAOI, LITE. What's Oklo doing? Oklo we were looking at. No follow through yet. GLW, another optical cable provider. Okay, stocks feel a little heavy right now. Snowflake back to the high. Snowflake, Broadcom. Okay, looked like 3 days of distribution to start the week in Broadcom. So it's nice to see this back up. SK Hynix having a good day. Breaking out. I have the 170 call looking for SK Hynix to continue. S&P starting to roll over a bit.
12 years ago, the shares are down.
Okay, let's see what this looks like. SK Hynix is still going here. Wow, nice move on SK Hynix.
Things going on here. A lot of it has to do with competition in China, particularly on some of the food delivery. There is promotions being offered in that market, and so all of that weighing on the company's numbers. And then finally, we're watching Dell and HP go up. It's because of Lenovo. You see there the U.S. listed shares of Lenovo. Not huge volume, but enough to see a 19% boost.
What's SpaceX doing? Still fading. SpaceX still fading. Trapping people.
This fiscal year, it has to do.
SpaceX.
The company says it's going to boost demand for its hardware. Revenue in the quarter just reported was up by 43%, adjusted profit up 176%, and operating margin hitting a record of 9.1% for the company. Dell shares, by the way, speaking of records, Dell shares are trading at a record high today as we see it drafting on to that gain from Lenovo. Coming up, we'll take a look at the state of power demand for AI data centers. That's next.
SpaceX. Inside day, SpaceX. 60-minute looks good. Pulling back to the 20 EMA.
Try them today.
It feels like everyone's trading the markets these days, and maybe the thought has crossed your mind too. Portfolio you've spent years building, that should stay exactly where it is. Tradeify offers something different. A low-risk way to actually trade the markets without sacrificing
focus on the trades. When you profit, you keep up to 90%. Trade a buy, scan the QR code and get funded today.
From these companies, I mean, do you think this is a fair reaction to what we're seeing today?
Yeah, thanks, Sam. I think that the most interesting story here is profitability rather than growth. Revenue fell 3% from a year ago. The decline marked JD.com's first quarterly revenue contraction since its 2014 listing. So that's why we're seeing the stock reaction today. But adjusted net income increased about 21% in free.
Okay, NVIDIA pulling back pretty aggressively. NVIDIA hasn't been acting normally lately. Doesn't hold the gains. I don't like it. S&P rolling over, starting to fade from these highs. Okay, S&P fading.
Businesses fell by about a third from a year ago, but I wouldn't look at these numbers and say the Chinese
You got rejected. Hedge flows are still rising. That's kind of odd.
I think that's down 15% in the first quarter. And supermarkets, on the other hand, remain relatively healthy. So my takeaway is
Okay, starting to peak out now.
in a still mixed consumer environment.
Yeah, I mean, certainly it seems like they're operating a lot better in this current environment. As you say, it's a bit of a tricky balancing act.
Okay, so the opportunity to sell some, reduce some exposure into strength.
Deficit, but on the other hand, they are seeing that profit margin
Starting to fade now.
been a brutal food delivery war there, particularly with respect to pricing. So do you think we're going to see a similar thing with Alibaba, or do you think it's different because of the fact that it has a big AI story that everybody's focused on?
Alibaba is a different story. Alibaba has shown it can generate strong AI and cloud growth. Now investors need to see the return on that investment. So not dissimilar from what we're seeing here in the US. I'd say that with Alibaba,
I don't know if you guys have noticed this, but when I put in a limit order to sell options, especially in some of these ETFs like SOXL, I have noticed that if I put in a limit to buy or limit to sell or to buy, immediately the bid goes higher or lower, or the offer goes higher or lower right after I enter the trade. I cancel the trade, the bid goes back up again. I put the trade back on, same conditions. The bid drops, asking me to chase it lower so that I have less profit. So I found what I've been doing is I put in a limit order, good till cancel, and just let the fill take me out. But it's immediate. It's like as soon as I hit sell limit, the bid goes lower. It's weird. Computers. Okay, IWM pulling back at highs.
And those businesses could become important growth engines for the company But Baidu's traditional business is search advertising, and AI is changing the way people search for information in the first place. So Baidu is essentially trying to build its next business while AI is disrupting its.
All right, looking for a bounce here.
That tension is something that I
Let's see, non-zero day, nothing there. Net open interest. There was a big level at 78.10. Got a level at 77.90. We could get down to that level. Starting to see a little bounce, maybe some bear flags now. Get a bear flag, it rolls over, it'd be a better opportunity to take some puts. It's at VWAP. We're looking for a bounce at VWAP, near VWAP. Okay, I have to take a 2-minute break. I will be right back. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Thursday, August the 13th, 10:52 a.m. I'll be right back.
China is cautious but increasingly constructive. China still looks like a two-speed economy. Exports have held up relatively well, but domestic demand remains soft, and the property market continues to be a headwind. Today's GD report is a good example. GD is getting more profitable and generating more cash, but its revenue still decline. So we're seeing some companies execute better even before we've seen a broad economic recovery. Alibaba has this strong AI and cloud growth. Baidu is building new AI businesses, and Tencent has also been investing aggressively in AI. That's why I wouldn't make a blanket bullish call on China, but I do think that there are increasingly interesting company-specific stories within China technology.
Yeah, certainly looking for the ROI and the payoff right now. And we really appreciate it. Thanks so much for jumping on. And one there, managing partner over at Runnymede. All right, let's trade Barber now with Tom White, host of Fast Market. Very different looking year to last year, Tom, for this name. Particularly because it's off by double digits year to date. Just walk us through an example trade.
Yeah, it's seen some weakness, and it's been a lot of monetization of the different segments of their business. It's still down about 3% on a year-over-year basis, and offering in bear market territory for 52-week highs also. So it's been under pressure. Their report earnings, as you mentioned, next Thursday. The option market priced in for next week is about plus or minus 7.5% in either direction. We've seen that consolidation over the last couple of days here. So I looked at a strategy using the option market that allows me to profit in a move either to the upside or to the downside. I don't have to pick a direction. I just want the stock to move post earnings during this event, the earnings event. So what you do in these long iron condors, you buy it out of the money call vertical. So bought the 128 strike call, sold the 131 strike call. There's a $3 wide bullish call vertical. And then on the put side, I bought a 117 put and sold the 114 put. So bearish $3 wide put vertical. As a combination, as a package, it's a four-legged spread. You're going to spend about $1.50 debit. Here's your risk, $150 per spread that you do with the potential to make $150. About 5.5% from the share price. So within that one standard deviation.
All right, looks like we're going to go lower. VWAP is just below. A shooting star would be not that good. Where we have a big wick overhead. Let's see.
Alibaba with the expectations that, hey, implied volatility levels, while they're elevated compared to next returns, they're not exploding, but you're looking for a big move post-earnings.
All right, we'll be watching. We're counting down to next Thursday. That is the day we'll hear from Barber. Thank you so much for the example trade for us this morning, Tom. And we are looking at intraday high here, obviously for the S&P 500. We've also had a high for the Russell 2000 this morning. We are looking at pretty broad-based gains here, particularly across technology, hardware, software, the Max 7, that's all helping. A flat PMI, reading this morning is helping as well. Yields backing off, oils off as well. So that very much is aiding equities for us this morning. The Nasdaq 100 up 1.2% right now. Going to do it for us here at Morning Trade Live. I'm Sam Barnes. Download the Schwab Network app available in the Apple App Store. You've got Trading 360 coming up next.
All right, IWM. Pulling back.
Inflation data to sector rotations, earnings to policy. It's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by JD Allen for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors.
SK Hynix consolidating at the highs. SpaceX, are we turning yet? All right. Trying to get a turn on SpaceX. Airbnb starting to turn back up. All right, very choppy. We got a nice pop in the S&P 500, and we faded it so far. Looking for a bounce. Looking for a bounce and a follow through. Futures bouncing. Watching the Qs as well. Qs fading from the highs. We've got 330 stocks advancing out of 500. 80 out of 100 on the Qs. Okay, SK Hynix looks like it wants to go again.
So this is the part that makes AI to be different than just like a search engine. So they focus heavily on the inference side. Speed is very much better. They've also developed a very scale engine, which is dramatically larger than this conventional.
Hedge flows are trying to hold on to this level. GEX. Got a lot of rejection, a lot of resistance right here at 78.10.
Workloads and the growing customer adoption. The remaining performance obligations reached 25.4 billion, supporting their expectation for this significant growth. But headline revenue did miss, and so that was, even though it rose substantially, it wasn't missed for expectations. And shares again fell as it seems like the outlook was more so really just driven by
A little bear flag here off the high. S&P, a little bear flag off the high.
Expenses. Margins are also under scrutiny. They did actually not acknowledge this margin pressure specifically, and it's really from temporarily renting back systems to satisfy demand, but they expect improvements later.
Okay, so we have a pretty big level of resistance here. Most of you are aware of it. NVIDIA pulling back. SpaceX trying to turn up. We've got SK Hynix closing at the high, trading at the highs. Tesla at the opening range. It doesn't look like it's going to follow through. NVIDIA faded like it did yesterday, trapping some bulls. Okay, we got a level down here at 77.75, 99 percentile.
The latest victim down 13%. Johnny, really appreciate you breaking down those earnings for us. I do want to broaden it out, though. Welcome in our next guest joining us this morning, Tony Zhang, Chief Strategist over at Options Play. Tony, great to have you back on the show. Now, as we look broadly across the market, I was just talking to Jenny Horn about the AI trade. We are seeing energy and commodities gain more momentum. We're seeing a little bit of a broadening out here. How are you looking at this market? Do you view it as us entering a more balanced market where investors need and should have exposure beyond this AI trade?
Yeah, absolutely. You see on the back of the PPI number and kind of inflation becoming potentially less of a key area of risk here. 10 out of the 11 sectors are green on today. But more importantly, if you look at the equal weight S&P 500 index, continues to make new all-time highs along with the market cap indices. You know, this is showing us that the rally is continuing to broaden out and has broadened out substantially over the last couple of months, especially as while the AI trade unwound a little bit over the last couple of months, we saw that broaden out to the rest of the sectors. You know, we've had a really strong earnings season so far coming off of the second quarter. So, you know, and as you said, energy, commodities, all at the same time joining in on this as well. So it's not just equities. We're also seeing commodities and other asset classes join in on this move.
So how are you looking at it then, Tony? Where are you seeing opportunity here? Is it name specific? Is it sector specific?
Yeah, we see it across the board. But, you know, we certainly take more of a name-specific view for the most part, but we are looking at this from both an asset and sector rotation perspective. You know, we look at healthcare, we look at industrial, we look at technology as the primary driver.
All right, moving a bit lower here. S&P puts working back to VWAP. We'll see if they bounce at VWAP or not.
Whenever possible, to take exposure on those specific themes.
All right, and then I know that you're favoring energy right now. You think it's attractive.
77.75. 77.75. Somebody mentioned 77.75 this morning, I think. Maybe it was Grover. Okay, all the New York FANGs fading a bit. SK Hynix breaking out again. Super strong today.
So it continues to hold that 157.5 level. That's really a base that we're looking for it to continue moving higher from here. So, you know, as it breaks out above that level, we're targeting that 175 upside, which was the all-time high on ExxonMobil, especially as they
Okay, we got another move here at SK Hynix is going, SKHY.
this rate of growth we might see just gets reopened in the next few weeks. So even the oil prices at the moment have remained relatively depressed as a result of those pathways being to some degree still blocked. I think the upside here for oil.
Oh boy.
See upside exposure to energy.
So if we're seeking upside exposure to energy with Exxon, how would you look to trade this then, Tony?
Yeah, so right now options on these energy stocks are relatively inexpensive. So the way I would look to do this is to simply buy call spreads to the upside. So on ExxonMobil and going out to the September 18th monthly expiration, looking at buying a slightly in the money call, the 155 call, and then selling the 170 call just shy of that all-time high. Earlier today, you can pay about $6 for that debit spread, and that'll give you about a 1.5 risk reward ratio on a debit spread. And I'm specifically using a debit spread like this that's in the money because the break-even price is just a couple of bucks above where it is right now, so that I'm not paying too much in terms of time decay, because at the moment, you know, oil volatility remains relatively high, and I want to be able to get exposure to that.
All right, and I know you also like Oracle. So walk me through your thesis on Oracle. Still down year to date, trading higher though on the session right now.
Yeah, Oracle took more than a 50% haircut in the last couple of months here, but you know, as the CoreWeave earnings earlier this week proved, that AI infrastructure build out is not really slowing down. If anything, it's gaining.
Okay, SK Hynix still going here.
With that earnings, it managed to break out above that 150 level. That was a key level that we've been keeping an eye out for as a potential reason or a level to start adding to this position. So now that we've broken out above 150, especially on strong volume, while outperforming the S&P 500, this points Oracle towards 185 upside target, especially if you look at the fundamentals now. Now that it's taken that 50% haircut over the last couple of months, Oracle looks far more compelling from a valuation perspective, especially if you consider the growth profile and how profitable Oracle remains. That's really where I think Oracle, in terms of the quote-unquote hyperscalers, looks the most attractive from a risk-reward perspective to the upside.
All right, so you like Oracle, you like Exxon. What else are you looking at? I know the commodity space you mentioned. Any specific plays in there? And are they ETFs or are you doing physical assets?
Yeah, so we're doing certainly the ETFs between GLD and SLV to get access to get exposure to the upside in the commodities themselves. Within the miners, you know, as options traders, we tend to find that most of the miners are not particularly liquid. So other than Barrick Gold, we're not taking a lot of individual exposure to the miners themselves, other than potentially through GDX, the gold mining index. But within uranium, we're looking at CCJ to the upside. Obviously, the largest uranium miner based in Canada. It just also, again, from an options liquidity perspective, unless you're using the uranium ETF, that's kind of how we've been playing the commodity sector.
And you remain heavily invested in tech, even as you're looking more broadly across the market. Where are you seeing the most strength right now, Tony? Where are you looking for the greatest opportunity here?
Yeah, I mean, the big probably surprise for everyone has been how strong software has been, right? Because software's been the one sector.
Okay, we're still going here, SK Hynix.
Over the last couple of years as a result of the AI trade, but we're seeing a bunch of them see quite a bit of upside potential here. You have Adobe, you have Zoom, you have Salesforce. These are all companies that were potentially on the chopping block as a result of AI completely disrupting their businesses, coming back to life. We're really bottom feeding in some of these particular stocks, but they're the ones showing some of the most strength here in this.
All right, so left some money on the table there. Ursel continues. We continue to move higher. SK Hynix showing a lot of strength.
So, but within technology, the software space is probably the one that's most interesting to me outside of the AI names, the traditional AI names like Broadcom, Micron. Those are still also ones that at this moment I think it makes sense to continue to keep exposure in. Also, Hewlett Packard, HPE, another one that's worth taking a look at, making a new 52-week high today, actually.
Tony, always great to have you on the show. Really appreciate you bringing those trades for us today and also for your broad market thoughts. Tony Zanke, strategist over at Options Play. And we've got a lot more for you today. The big three is coming your way next. We've got 3 stocks, 3 charts, and 3 trades for you. Rick Ducat will be taking us through the technicals, and Mike Shore is taking us through his trades today. He's got some good ones for you. Stay with us. They're Vertiv Holdings, Zillow Group, and C Limited. That's all next on Trading 360 on Schwab Network.
Oh boy, hope everyone's having a good morning. Taking some time to take profits off.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers, just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
Okay, Intel continue. SK Hynix is kicking ass. Wow. This is really looking good. SK Hynix.
We're going beyond the earnings to get to the heart of the people and companies driving the global economy. If you want the full story, not just the headlines, Market Matters is for you. Subscribe wherever you get your podcasts. Welcome back to Trading 360. I'm Marley Caden. It's time for the big three. We've got 3 stocks, 3 charts, and 3 trades for you. Rick Ducat taking us through the charts. Here to take us through the trades today, Mike Shore, Director of Trading Education over at Prosper Trading Academy. Great to have you both on. Mike, would love to get a thought on this. Nice, and making sure we're holding on to it. Of course, we're not. The Dow has moved into the red, but a mostly green day across our major averages. We got PPI this morning unchanged. How are you looking at the reaction we're seeing?
It's not completely surprising. It's really hard to chase these stocks. So, I'm definitely, there's no reason to be, but, a more balanced approach, buying things that might be a little bit, selling things that seem to be overdone, that sort of thing. That's what we're looking at in retail sales tomorrow, which can either kind of confirm the CPI and PPI prints from yesterday and today.
All right, so let's dive into your big three. You've bought C Limited to us as your first pick here. They had a mixed earnings.
All right, SK Hynix still going. Jeez.
The numbers were great. I mean, those gains. And so we had a big jump from
So a potential put calendar here for C Limited. As what strike prices are you focusing on here? What level specifically are you looking at?
So I was looking at anywhere between below 24.5 and 20 to 60 months. That's good. August 21st versus September 11th, 115, which is the bottom of that gap, that earnings gap. Buy that for maybe it was trading about $1, might be a little bit higher than this because we're trading down. But you know, I model to nearly about we hold this until the 20th of September, looking at somewhere between 1.9 and 2 to 1.
All right, Rick. So if we look at the technicals on this one, are you seeing the potential that we could perhaps head down toward that 115?
Sure. So to highlight some of the levels that were being discussed here, 115 is our green line.
All right, so we're back up to the highs. SK Hynix, nice move there. Ooh, SK Hynix. Okay, what is S&P continues to move lower.
So relative highs recently, 132. That's where we hit our high water mark after earnings here. 148 also speaks up here. High point and high point here that has really not been tested.
S&P still moving lower.
Shows that it is accelerating to the upside. We had our old trend line here in blue, which has now given way to our steeper, sharper trend line here. Earnings rewrites the situation somewhat here, but these areas still stand out as potential areas of support to watch out for going forward. So next we can think about our moving averages. In this case here, our 5-day EMA in dark blue is where we are seeming to come close to testing right now. 122.55 is where that one comes in. We are a bit above that, about $1 above that area right now. So that could be one area to watch out for if we do deteriorate a little bit more. Below that, we also have a confluence. We have our 21-day EMA representing 1 month trading activity. We also have it lining up very closely with our 251-day EMA representing 1 year, 251 trading days in a year. So our teal and orange lines right on top of each other here, about 112, 113 or so, gives us another notable support area to watch out for. RSI has also been interrupted here. You can see that we are, in additionally to no longer being in the overbought area, we've had bearish crossover below that threshold of 70. We also seem to be moving below our shorter term green trend line here as well. So a bit more information in the bearish column right now in terms of our technical studies. Now we can see that our volume profile study shows we have a node here between about 102 to 113, as well as here 120 to about 135 or so. Those are the standout areas close to our current price activity. Things are a little more slight above where we are now. There is another smaller node here about 145%.
All right now we are at 123.55, down about 3.5% for C Limited on the day. Also almost about the same down year to date, but if we look more broadly over the last 52 weeks, we're still down closer to 30% for C. Now your next one is Zillow. We're in real estate here, so obviously overall the entire industry has been under some pressure, but Zillow did have good earnings. It's had some momentum on its side over the last month. So how are you looking at Zillow, Mike?
Yeah, so going with my theme of balance here, I got something for everybody today. So, it's just not going anywhere. And so, until we start to see any sort of green shoots or anything coming up, as far as the housing market goes, I don't think that this changes. So I'm looking at an icon of just sit and stay. Applied volatility is a little bit north of that 50 line. So it's lower 55% of the time over the last 52 weeks. So I'm looking at an icon, or this is for regular stuff, 921. This is the 25, 30, 37, 42. You should be able to sell that for about $1.50. And just in this low environment, really the good earnings are helping hold it up. Market is pushing it down. So I intend for that to continue.
All right, Rick. So as we look at Zillow and the technical,
S&P still fading a bit.
the levels that stuck out to you.
So
Puts are working if you have some extra cash. Maybe you, I wouldn't buy them down here. If you do buy them down here, buy spreads instead. This rolled over right where we would expect it to roll over.
to be sure, a pronounced sideways drift is what has taken place recently. Some other horizontal levels that traders may be interested in. We had a gap here near around 36. We also had a short-term ceiling here near around 37. So those areas also stick out. Our general price trend lines here show that we had a very slight trend line pointing upward along our lows. A longer-term one could draw going along these highs here that we saw. So sort of a triangular shape here, suggesting lowering volatility, which often can be the precursor to higher volatility when you do get an eventual breakout beyond either of these established boundaries here. So our moving averages are mostly clustered together in this case, matching our idea of lowered volatility here. So around 33 to 35 or so is where our 5-day, 21-day, and 63-day EMAs come in. Our RSI study, our measure of momentum, we are a bit above the 50 midline here, but we took something of a hit after earnings, just modestly above that midline that separates bearish and bullish momentum. So look for RSI to make a matching breakout in tandem with price for further directional bias. So in this case, our volume profile has very clear nodes that are close to where we are now. One matches up with our range bound area we established recently between about 31 to 36. The other matches up with our prior range bound area we saw here between about 42 to 47. So just kind of in general, Zillow exhibits this stair-step type of price activity. We see a consolidative periods followed by large breaks, and then another consolidative period, a large break, and then a range bound area again. So this is a pattern that shows up very commonly in our stock.
All right, right now as we look at Zillow, it is up 3.7% today, trading around 34.49, but under pressure both as you look at any of the 6 month charts, the year to date or the full year. This last one is Vertiv, which has had some very nice growth as I'm looking up about 80% year to date, a little bit of pressure over the last month. How are you looking at Vertiv right now, Mike?
Yeah, exactly. So, Vertiv is, let's call it, the AI infrastructure, lack of a better term. And, this is climbing on to the AI train that I'm not giving up on, but this is training behind it. And so I like the potential here. Now, we do have to do a little bit of work on this one, because I want to get above that 50-day moving average. And said, I just round number 299. What I'm looking at is August 28th, 320, 330, 335 broken wing call fly. We can buy that for about 140 if we get up above 299. Maximum reward is $8.16 there. So you're looking at 6.141 for your reward risk.
All right, so as we look at this with Vertiv here and that trade, what is standing out to you here in the technicals, Rick? I see we have a downward sloping channel, but it seems that now we have a converging line.
Right, so 320, 330, I don't quite have those exact areas highlighted here, but 315 is the one that stuck out to me based on it being a relative high point here. And then also...
Okay, we continue to move lower here, S&P. 77.75 is the next level.
Trade that was just discussed here. So we also can see a recent high became a new low point here. So the resistance became support around 286. Repeated highs here became low points again multiple times near 275. So this one stands out more prominently. Finally, a gap here, 264, which got filled. It was not the largest gap, but it was one that remains kind of a question mark here in terms of price activity filling the void that was established there. So now our moving averages are a bit of a mixed picture once again here, because we have our faster 5-day EMA below two of our slower moving counterparts, but starting to cross above them here. We can see the 5-day crossing above the 21-day. Meanwhile, our 63-day gold remains at 292, That is the level above which we are trying to seemingly overtake today, which also corresponds with our downward sloping white line here. So our channel and our quarterly 63-day EMA will line up on top of each other. So that would be a notable breakout as well if we were to push to the upside beyond that boundary. RSI shows that we are starting to cross above the 50 midline as well. So momentum is starting to improve here. We are having that shift above the 50 midline and above the trend line concurrently. So if we were to couple that with a breakout, that would be a rather interesting bullish development here. So now volume profile shows one node here, 253 to 275, and one here, 300 to 330 or so. Those are the kind of bookends here that would be presented for heavy trading activity, consolidation zones potentially here to the upside and the downside.
All right, as we look at Vertiv right now, we are up more than 1% on the session right now at 291.89. Mike, really appreciate you being with us today for Big Three and for bringing those picks to us. Mike Shore, and of course, Rick Ducat, our lead market technician, for always breaking down the technicals. Coming up next, we are going to spotlight CoreWeave. The stock rallied nearly 20% Wednesday after its earnings. The company's co-founder and chief development officer joins us next. You don't want to miss it. Stay with us. Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are. Hey, Dan, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. We really started with nothing. He worked hard, and after he passed away, the torch has been passed to Dave and my advisor Jennifer. Two's with me with the journey, helping with the estate distribution. The two grandchildren planning for their college educations. Someday it'll be their turn. Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action. Check.
Excuse me.
Futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern. Schwab coaching is concepts brought to life in the room.
It's absolutely world class. We have coaches who have been in the industry, around the industry for a long time. We have different formats because people learn differently at different times. We have webcasts running through YouTube all day, every trading day. We've got events that are making their way around the country. So you get that opportunity to share experiences and knowledge with other traders.
How incredible is that? And it's free. Stay connected to what moves the market. Download the Schwab Network app and stream anytime wherever you are. Welcome back to Trading 360. I'm Marley Caden, live in our Chicago headquarters. It's time to spotlight CoreWeave. The stock rallied nearly 28% during Wednesday's session after second quarter revenue more than doubled year over year, and the backlog topped $100 billion. Joining us now is Brandon McPhee, co-founder and chief development officer at CoreWeave. Brandon, great to have you on. Now, your CEO says CoreWeave.
Hold on one second, folks. I got to get this.
That is a good place to be. So are you still seeing a utility bill each month, even with the solar?
Yes.
Gotcha. So about how much does that usually run each month?
About $150 a month.
Oh, wow. That is a bit higher than what most solar customers around here see. Have you noticed any issues? Or does it seem like something might be off a bit?
No, no issues.
Okay. With it running that high, it is worth a closer look to see if it could be doing better. Do you have a few minutes right now for a quick chat with a specialist to review it and see what you might qualify for?
Sure.
Okay. Let me check if we have a specialist available right now. Hang tight for just a moment. Sorry about that. It looks like nobody is free right now. So let's get you scheduled for a quick specialist call later this week. Would tomorrow or later in the week be better for you?
And that is advancing beyond these frontier labs. I mean, you've got Caterpillar, you've got Lidos, Flow Trader, all listed as you watch just this quarter. As Chief Development Officer, how are you overcoming these grid interconnection delays to bring online that?
Are there electricians? Are there enough components to be building out these data centers, etc.? This isn't new to us.
Looking up some data before we were talking, and the IEA is forecasting global data center electricity use could be double by 2030. So I guess my follow-up to that, are you also looking at alternative energy sources like co-located nuclear or geothermal, microgrids, anything to bypass traditional utilities?
Sure. So we don't market capacity availability to our clients until we actually have that data center and associated power secured in our portfolio. So we're not, signing GPU contracts and then going out and hoping we find capacity in what is a very constrained and difficult to navigate market. We kind of flip the process there to ensure that we're not disappointing our clients. In terms of the types of power station, we're very focused on grid power. Right? But we're not really doing too much behind the meter or self-build generation right now. We think grid power is the right type of resource to be working with and have found plenty of availability across the US.
And as you mentioned, things that you might run up against, one of them is local opposition to data centers. When we have this NIMBY movement, we've got the governor of New York signing an executive order for moratorium on large-scale data center construction. Your CEO noting that regulatory pushback does make some of your conversations more challenging right now. How are you adjusting? How is your site selection strategy changing as you're trying to navigate this ongoing state and local opposition? And now I'll even put the word bans in there.
Yeah, look, that state and local opposition does not change the demand profile for AI, right? It might change where it gets built, but overall, the demand profile for AI is just, it's just through the roof, right? It's an insatiable demand for compute. There's truly no way to solve it in the near term. So it could end up shifting where data centers get built, but it does not change the
need to be building data centers in the US.
And last question here. You're competing with Microsoft, Amazon, Google, some big names here. They have vastly larger balance sheets, while Meta and others are expanding their infrastructures. What is CoreWeave's enduring competitive advantage that makes you so confident that you can remain a major winner in AI compute if we're having this conversation 5 years from now?
Sure. Maybe just quite simply have the best technology solution in the market. That technology solution, I think, is recognized by.
All right, I apologize. Get a little sidetracked here. All right, S&P continues to move a bit lower.
We've been there for years. I think we've been answering this question for years at this point. Like, why are these other much larger businesses not able to be effective in delivering a better product than you? And I think it's just due to our focus on simply delivering this one product in its best format available to you.
The proof is in the pudding. Brandon, really appreciate you being with us today and taking the time to walk through your earnings and the latest in your outlook for CoreWeave. Brandon McBee, co-founder and chief development officer at CoreWeave. Coming up next, we've got the disruptors. We'll examine Marvell after a price target hike over at Goldman Sachs. Alex Coffey will weigh in on the call and also have an example trade for us after this. Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com
And on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
How's it going? First day, so sometimes, next, try it again. You could have done better. Please.
SK Hynix at the highs.
Level up and invest smarter with Schwab.
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the watch list.
What's this? SpaceX. What are you doing, SpaceX? Trying to turn up, SpaceX? Looking for a bounce here. Looking for a bounce in the S&P.
Real-time interviews and insight from analysts, founders, and market voices you trust. The watch list, 2 p.m. Eastern, only on Schwab Network.
Welcome back to Trading 360. I'm Marley Caden here at our Chicago headquarters. We are 2 hours into the trading day. Here's where we stand. As we look at the S&P right now, we are higher, up about 0.4%. The NASDAQ is 1% higher. The Dow has flipped since the top of the show into the red. We're now down more than 0.1% at 53,683. And the Russell 2K is down 0.2%. As we take a look at some of the leaders today, SanDisk, Supermicro, Western Dig, Micron, we've got memory higher, Supermicro still riding higher off of its earnings report. But as we look across some of the laggards here, we've got Tapestry falling 15% on its earnings. Cisco also falling, had strong earnings, but some concerns potentially over declining margins. We're going to break that down in our panel at the end of the show. Coherent is also lower and Gartner lower as well. But I want to stay with Tapestry here in that 15% move to the downside. And the New York Stock Exchange and bring in Nicole Petalides, host of Opening Bell and the Watch List. We're seeing quite the sell-off in Tapestry today, despite its Coach brand having another very strong quarter, Nicole. So what's standing out for you on this report?
It's really evident within the report that it's all about Coach. Coach is seeing the growth. Coach has got a new viral love from the Gen Z group, new customers, millions of them. Whereas Kate Spade's turnaround is taking much longer than expected. As a result, the company gave an outlook that was a little softer than expected. Hence, you see this down arrow stock today. Coach,
All right, looking for a bounce now. See if we can get something out of this.
minus 7% decline in revenue we saw from Kate Spade. With this softer revenue outlook of $8.4 billion to $8.5 billion was a slight miss, but a little bit more encouraging when it came to earnings per share. They're in the midst of the turnaround. The CEO, Joanne Presseblock, noted that the fourth quarter really capped incredible growth, strong growth, and meaningful, exceeded what they had anticipated and delivered on Investor Day. In fact, saying that they achieved some financial commitments 2 years ahead of plan. The turnaround is underway. It's taking that lagging and will turn around as well. It's just taking a little longer. In the meantime, Coach Gen Zers all popped up. When it comes to marketing, the 85-year-old classic handbag is on again. And when we think about when Coach was established in 1941, much like Ralph Lauren in 1967, both of these companies were in peril 10 years ago. Both of these companies closed weak stores, did less in the department stores, discounted less in order to really bring what they have. And that's heritage, respect for quality, and also elegance, bringing them up to a higher luxurious brand. Now, they're not as high or as expensive as Hermes and Louis Vuitton, which makes them more affordable. They saw growth in China, they saw growth in Europe, but North America, they did notice cautious spending. But overall, doing very well here in the big picture.
Every time I see someone with a Coach crystal ball, it just brings me back. Still a big fan of their shoes, so really appreciate you breaking us through those numbers now. Nicole Penelides. Now it is time for the disruptor, Alex Coffey, our senior equities contributor, here with me in studio to take a look at Marvell today. Alex, we're going to get their earnings at the end of the month here, but Goldman Sachs raising its price target in advance of that report.
This is another one of those AI infrastructure names that has had just super dramatic price performance over the last year, 6 months, 3 months, pick your time frame. The picture is very different. But after basically being cut in half from the highs, made a nice recovery. Goldman's James Schneider raising the price target to 195 from 180. Now, it does still have a neutral rating on the shares. If you were to look at analysts as a whole, only about 10% of them are in the whole camp or neutral camp. So kind of in the minority here, if anything, a little bit less bullish than its peers. But sense that the expectations are elevated following constructive AI infrastructure data points intra-quarter.
All right, S&P still looks weak, pulling back into the range. We did make a new high. I got a feeling we're going to bounce, but most everything has pulled back a little bit going into lunch hour. So BNC pivots, we'll look for any kind of strength. I'm a little disappointed that we lost some of this leadership. SK Hynix at the highs starting to flag out. I had the 170 call. We're getting really close now. Looking for that to follow through.
To good and or great numbers in this reporting season already since they're at the end. How would you look to trade this thing?
Yes, I think there's a couple lines of thinking. One is that you basically welcome that risk and you can do a trade that would encompass that date, that earnings.
Okay, Palantir. Let's see what Palantir is. A Palantir. Okay, turning the corner. Palantir just dipped. Turning back up now. Right at pre-market highs. Let's see if the volume picks up here. Palantir.
Trade that looks for this stock to rally to somewhere between 240 and 250 by the end of next week, and if it does, a chance to make $700. 230, 240, 250, 255. Structured for a $3 debit, there would be no upside risks. You would just give up some of the potential profits. If it went through 255, you would make $200. If it's between 240 and 250, you could make $700 with a 233 break even. So you do need about a $6 rally in this stock just to break even by the end of next week. But with the stock up $10 today, it shows it certainly has the movement potential to do just that.
It certainly does. Yeah, we're 227.20 right now with this more than 4.5% move to the upside, and that excludes the earnings event. That's not
Palantir. Okay, SK Hynix. I have been.
We've got Cisco moving lower this morning despite a strong earnings report and guidance that came in above street estimates. We'll dive into why when Trading 360 returns.
Trading a Schwab is powered by a megatrend, unlocking the power of thinkorswim.
Okay, we got a 99 percentile level right there. Okay, it's grown a bit. It's grown a bit. $3 billion in the last 50 minutes. '99 percentile. Notice it's grown a bit.
More analysis and forward-looking market coverage at equity trading. Only on Schwab Network. Hey, Dad, I have a question for you. Sure. When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torches would pass to me, and my advisor Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren, planning for their college educations. Someday it'll be their turn.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas to structure, risk management, and a focus on execution. From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
Welcome back to Trading 360. I'm Marley Caden. Cisco moving lower this morning despite beating on earnings and issuing full year guidance above street estimates. In addition, networking revenue in the trailing quarter grew nearly 30% year over year. However, gross margins did dip more than 200 basis points to 66.3% as memory costs increase. For more, let's bring in our panel. Joining us now, Paul McCarthy, president at Kisco Capital, and Melissa Otto, head of Visible Out Research at S&P Global Market Intelligence. Great to have you both on. Melissa, let's start with you. I mean, we've got good numbers here. They beat on earnings, they beat on revenue, they raised their outlook here. The stock is down more than 8%, close to 9% right now. What is driving so much move to the downside here?
Thanks for having me on. A couple of things going on with Cisco. First and foremost, they did have a good quarter. Visible Out and consensus in their segments, and as you mentioned, around networking and security. Their guidance was good, also beat consensus, but the issue really seems to be around the gross margin and the way that they guided. The gross margin came in a bit light of expectations. Second thing is that the stock's had a good run, and it does trade at a pretty rich multiple, so there may be a bit of sell the news in this.
And Paul, how are you looking at the significance of that pressure on the gross margins, particularly as Cisco is ramping up its AI infrastructure? Is this everything was priced to perfection reaction because we've seen Cisco gain more than 60% year over year? Or are there real fundamental concerns here?
I don't think there's any real fundamental concerns. I think, in the company's call, they alluded to CapEx spend might affect their margins. Maybe the risk they don't convert their pipeline into cash. I think that's probably a low probability. I think what we're seeing now, the stock is really very technical. I mean, we had a very good run up to 130, and there's an extreme overbought condition. If you look at the relative strength index, and I think that what we're seeing is just some consolidation, working off an overbought condition. Maybe we dip down below the July low of like 107, 108. But I think that, seeing the stock get overbought and they consolidate, there's always a concern after a big run up that it just collapses and rolls over. But I think the stock's holding up pretty well given how much it's run up this year. So I really just see this as part of a normal consolidation period. And, it's a very bullish chart. What we heard from the company was very bullish. I think that they were being a bit conservative in their outlook for the next few quarters. I wouldn't surprise me to see them do better than
Okay, looks like we might move a bit lower here.
for the next 6 months. You're probably seeing new highs. So, but this is definitely a bullish condition for sure. We're just in that consolidation period right now.
All right, Melissa, let's look at some of that growth here. They had $9.3 billion in hyperscaler AI infrastructure orders in the quarter. They're now projecting for revenue.
Palantir turning back up. Okay, Netflix looking for stocks to bounce. Netflix starting to show a sign of a bounce. Is it a fail here or what? Microsoft bouncing off the low. Shorts covering, pretty obvious, just shorts covering for now. Intel The chips looked okay. They moved higher. It's all right. I mean, we're in this zone now. We need to get above the 50-day. Intel looking a lot better. The 200, it's above the 200-day, above the 50-day. So that looks pretty good. Okay, Q's just taking it easy.
Question that comes up about what are the returns and how are they delivering really deliver shareholder value. And I think, this is maybe what investors are, some of the more bearish investors are really looking for something, some evidence, something to hang their head around this.
And Paul, how concerned are you about NVIDIA here moving further up the networking stack? Could their integrated AI networking offering now eventually put some pressure on Cisco's opportunity?
Yeah, I mean, they compete with the Ritz, NVIDIA, Juniper, Dell, so there's competition out there. I mean, recently they did mention that they just won 3 new hyperscale AI infrastructure design wins, and so they're showing success. The CEO on the call last night mentioned that about 6 years ago they started to really emphasize getting better relationships with hyperscalers. So this isn't just something that fell into their lap and they're scrambling to catch up and deliver. They've actually been working on this for some time. And they're also seeing, a broadening base beyond hyperscalers. They think the non-hyperscaler AI orders were about 1.3 billion, which is up roughly 150% year over year. So that's a good sign too, that they're competing not just with hyperscalers, but trying to build out a broader base of customers. So, I really do think they've been working for some time to deliver on this, and it's really just about management executing at this point. That's what I think the biggest risk is.
Well, the Q4 results, revenue coming in at 17.3 billion on EPS of $1.22, but again, falling slightly on some concerns over those margins, down about almost 9% right now. Really want to thank you, Paul McCarthy, for being with us today, President at Kisco Capital, and Melissa Otto, Head of Visible Alpha Research at S&P Global Market Intelligence. We'll check in here with the market. And here with this fractionally, the S&P higher along with the NASDAQ.
Intel. Okay, looking for a direction here from the S&P. Looking for direction. Note hedge flows are turning up.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by JD Bell for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee payments for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get with Schwab Bank Investor Checking, the checking account built for investors.
Schwab Coaching is concepts brought to life in the group.
Schwab Coaching is learning constant.
It's relatable, it's practical, clear, understandable, and hopefully entertaining. Take it for what it's worth, but I think it's absolutely world class.
Schwab Coaching is actionable, individualized, community, growth, and empowering.
It's really a human touch with your investing. We have coaches who have been in the industry, around the industry for a long time.
So the nice thing about Schwab Coaching is that clients get access to 9 different sets of expertise.
We want to engage with you and chat on the shows we host. We want to engage with you outside of the classes we host.
That could add to this trip. So we shall see. We have different formats because people learn differently at different times.
Somebody's a real bookworm, we've got forces for you to learn from. They can dig in, go at their own pace.
We have webcasts running through YouTube all day, every trading day.
We've got this ongoing 24, 25 times a year events
that are making their way around the country.
So you get that opportunity to share experiences and knowledge with other traders.
They're kind of helping each other learn step by step along with the education that we provide them as well.
We're going to be able to help you regardless of where you are on that path of education. It's really unique, not just that it exists, but that you can tap into 30-some hours worth of it each and every week. How incredible is that?
Okay, futures looks like we're going to push a bit lower here. S&P. All right, so we're back down to 77, 75 GEX here. Most likely going to bounce there. Looks like more bear flags. So I would just expect that we're going to see more of this.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Welcome to Fast Market here on Schwab Network. I'm Diane King Hall. It's noon Eastern here at the New York Stock Exchange. The bulls continue to push records for the broadest benchmark of U.S. stock and small cap. Both hit new highs today. Let's do a check of your scorecard, though, as we hit the lunch hour on Wall Street. The S&P 500 still has a gain. We're better by a touch more than 1/3%. Down a little soft here. We're off by just shy of 0.2%.
Edge flow's turning up a bit, even though S&P did fade just a bit more. 7775 is a 99 percentile level where it was a few minutes ago. Okay, it's moved down to 7750 now. Just moved down to 7750. That's non-zero day. 7750 now.
We've got markets chasing records. The bulls are out in force for today, but they're being selective about where they go. The Dow's a little softer here. Slim gain here. We've got that PPI data that came in today as well. Tom, what's your big picture take when you look across markets, broad strokes?
Well, I think if you take a look at the price action of crude oil, that'll tell the story today. It got down near $80 a barrel. It was down pretty significantly, over 3%. And now it's back up to 82, right? Above $82 a barrel. Towards that, we're sending another aircraft carrier over to the Middle East. So maybe tensions starting to pick up back in the Middle East, and that's going to cause a little bit of problems. We rallied, as you mentioned, all-time highs, the S&P 500 and the Russell 2000, but giving up some of those gains. I think you're going to have to take a look at, what's going to negatively impact the markets here moving forward. And it's still going to be crude oil. It's going to be geopolitical tensions over in the Middle East. So you got to keep an eye on that. We got a nice pullback in yields today with the 10-year back under 4.64% at this point. That's a positive post PPI data that was better than anticipated. Moderation in the dollar also is helping support equities at this point. The PPI data, it's trending down. We had some comments from
Okay, SK Hynix going again.
Hammock this morning, pretty hawkish, right? Saying, hey, I voted for a rate hike and I still think we need a rate hike. But then you start seeing CPI and PPI data that is coming down. It's trending lower on a monthly basis, and especially those year-over-year numbers. I think those are key. And if you take a look at the trend there, we get crude oil back below 80. Maybe it's the all clear. Expectations for a rate hike in September have waned a little bit. We're back below a 40% chance according to CME FedWatch tool. So that's a positive. But yeah, it just feels like it's fits and starts here as far as a bull market rally. But maybe we should be in this type of mode, guys, where, hey, we're hitting all-time highs, but it just doesn't seem to be a lot of depth or liquidity behind this move to the upside. Maybe some consolidation needed when we're at or near record highs for equities.
Great analysis there. Kevin, what's your big picture take?
it's amazing all the data that we go through, all the economic data and earnings, and Tom has it right. We were higher when crude oil was lower. Crude oil's moved back off its lows, and the market has moved off its highs. And you could make a lot of fancy, stories about what the market's doing, but we're really inversely tied to the price of crude oil right now. I think the inflation data, I'm sure we'll talk about that in a moment. That was pretty solid. Some of the earnings, Cisco, we talked about this, the valuation in Cisco. They put up pretty good numbers, but the stock has moved lower. I think this is just a market that's bumping up against all-time highs and really sensitive to the price of crude oil. Look, Tom mentioned Beth Hammock's statements this morning. In 2024, when they voted, she wasn't a voter in 2025. In 2024, she abstained when the Fed was cutting rates. She wanted to hold them steady. So she's been hawkish all along when she's been a voter. So not really surprising. Her comments were a bit harsh, but she's hawkish, and she has been since 2024. So not really surprising that she would come out on the hawkish side. But, yields are lower, the dollar's lower, crude oil's lower, but not as low as it was. And so the market is still higher, just not as high as it was, Diane.
Okay, good point about not as high as it was. Looking at the heat map there. So let's pick out some individual names here. Take a look at the rally happening in the memory and AI infrastructure space. You got SanDisk still holding on to a strong gain there. Western Dig higher right now by more than 8%. Super Micro gaining ground, also move there, big move there. Dow higher by just shy of 3%. We're still off to the races here. Yes, off the highs of the session. But Tom, take us through what you're watching in the memory and AI infrastructure trade.
Yeah, this is all about SanDisk and their investor day, coming out with some commentary, expecting to return 100% of excess cash and investments to stockholders at this point. So it's causing a pop. That, along with some data out of Lenovo overseas, they delivered strong quarterly growth that has some of these other enterprise, rack system makers, Dell, HP Enterprises, all moving to the upside. So good news on that side. But we've seen that narrative play out repeatedly. I mean, we're going to talk Cisco.
SK Hynix.
The amount of
Where are you?
that these hyperscalers are
Where? There you are. Okay.
AI infrastructure build out continues.
SK Hynix going to be at 170 soon. Wow, this is looking good.
Also, so that narrative where we saw massive pullbacks in memory chip names, we saw massive pullbacks in the semi-equipment makers recently. Maybe that's all for naught. I know there was parabolic moves to the upside. They were getting pretty expensive on a core valuation basis, but that narrative is still in play here, where the AI infrastructure build out continues to ramp up, and that's why I think you're seeing a bump in that specific sector. That, and maybe they were oversold on a technical basis from those recent all-time highs in a lot of those names. But yeah, this is kind of reflective that the AI investment cycle is still ramping up at this point.
Yeah, indeed, it is not dead yet. Clearly, by the momentum that we're seeing today. Kevin, what's your take when you look across most memory names? The move in SanDisk certainly giving a sympathy and lift to others. What's your take?
These stocks all move together, right? You see the memory stocks move, and a good, positive investor day on SanDisk where they outline a long-term financial framework for fiscal years 28 through 30. And so that's what this market has been doubting all along. We're going to look at another stock today in our trades where the stock made incredible highs, has come down off those highs. That's what's going on in a lot of these names. Stockholders need to be assured that this has longer legs. And SanDisk earnings day, which that's
Okay, S&P managing a bounce at 77.75 GEX. Ooh, we got 77.50 now down below. Okay. 77.50 down here.
it was a good quarter. But Tom, what's your take on Cisco?
Okay.
Yeah, we spoke about this earlier. Beat on headline numbers on EPS, on revenue. They're booking orders over $5 billion the first 6 months of the year. It seems like everything's okay when you look at this report. Then you start looking at those gross margins. Which
Okay, watch this level here. If this rolls over, could continue.
I think one of the keys when you look at some of these sell-offs post earnings, we've seen that across the tech space recently, is the fact that, hey, the bar was high on a lot of these stocks. I mean, Cisco is still up 46% so far this year, up 16% over the past 12 months. So the pullback may be related to the gross margin story at this point, but it seems like they're firing on all cylinders. The CEO came out with some commentary earlier today where, they kind of missed the boat maybe about 5-8 years ago on technology and the move. They said they're not going to miss out on AI. That's why they're ramping up. But it goes back to that fundamental narrative that, hey, the AI infrastructure build out is needed from networking giants like Cisco moving forward. The cybersecurity portion of the business starting to pick up speed also. It's starting to show some growth there. But you look at the 2027 earnings, they expect to be between 505 and 511 a share, 72.2 to 73.4 billion dollars. That's ahead of it in anticipation and expectations moving forward. So yeah, it was a good quarter, good guidance. But at the same time, when there's one crack in a stock that's rallied so much over the past 12 months, and it might be gross margins, it'll give people a reason to sell. But hey, maybe that provides buying opportunity for other investors.
Yeah, quick take from you on Cisco.
I think it's exactly right. When you have a bar this high, the fact that they reported margins dropping from 68.4 to 66.3, that was all this market needed. To take some of the valuation out of this thing. Besides that, Tom's right. Their CEO gave an interview this morning that was very positive, setting out the long-term plans. But the market just wanted to see the margins that he claimed 65% was okay. They gave 66.3, not good enough, Diane.
All right, let's talk about these consumer-facing names that are under pressure today. Tapestry down double digits, getting back most of its outperformance year to date. This one had been a strong one this year. A lot of the strength obviously had to do with the Coach brand, which it still is strong there, but that weakness, the weak link there is Kate Spade. I can talk this one, you guys. Yeti's also lower off the back of its quarterly report card. We kind of got a window into that with Lightfolio's data yesterday. Tom, what's your thought when you look across these consumer-facing names?
The Yeti move, when we spoke with Lightfolio yesterday about it, just the stock move prior to the earnings kind of offset that expectation that they were going to do pretty well. It was trending, the stock price was trending far above what maybe their data had. So maybe getting a little bit ahead of its skis as far as Tapestry goes. I mean, we've talked about the consumer a lot. We're going to talk about it more over the next couple of weeks when we get more retail earnings, is that, it's fits and starts. It's branding. It's consumer preferences. And they're moving away maybe from Kate Spade and some of the other brand names that Tapestry holds at this point. So I think it's still just a mixed bag. It is kind of reflective of that K-shaped economy. What the high-end affluent consumer spending on versus what the lower-end consumer can afford. Maybe they're trading down in brands. I think that's going to be key throughout the retail space because some of the retailers have been under pressure while others are doing well. Everybody keeps talking about the K-shaped economy becoming a C-shaped economy. I haven't seen it yet, though.
Okay, that's a good point. And also, to your point, what resonates doesn't always keep resonating. Again, for Tapestry, Coach is still doing well, but Kate Spade is still struggling to turn around. Kevin, what's your take, whether on Yeti or Tapestry?
I think the Yeti news, this was just the overall, I think, stock getting ahead of itself. Lightfolio gave us the data yesterday saying they're doing well, just not as well as their stock was doing. Their stock had taken off above some of their data. So even though the data was solid, their expectations had come down. And so
All right, hedge flows still moving higher. That's pretty bizarre. Hedge flows still moving higher. Oh, it's 12 o'clock. Let me shift here. I want to hear what they have to say over at CNBC.
I think we're somewhat, not we on the desk, but just in general, I think sometimes we have a tendency to over. Hundreds. I just think that's human nature. People just feel safety in crowds. The whole crowd is buying memory stocks. I'll buy it and I'll research it, when it goes down 10% to make myself feel better. Like it's just, I don't care. I guess my point would be like, I'm not trying to correct anyone's behavior. It doesn't matter to me. Big picture, we have a strategy called Porterhouse. I look at the top 10 names today, and I'm looking at SanDisk and Western Dig and Micron and Ciena, Astera Labs, Dell, Jabil,
SK Hynix at the highs.
These are the stocks in our portfolio. Those were also the top stocks yesterday.
But what is the likelihood that all 10 of those stocks continue to go up and to the right in the succession?
Not
the way they're being traded.
I agree. That's not the question that I want to ask, though. The question I want to ask is, do I have risk management in place so I can be in those names in a concentrated sleeve within a larger portfolio? If I don't, I'm in big trouble, to your earlier point. I think the people who are in these names, they have some discipline. It's hard to me to believe professional investors are in Dell and Astera and Ciena, and they're just in there naked and they plan to hope for the best. I think people are utilizing stocks, they're utilizing options, and we know that we're not going to see double-digit moves every week out of this group of names. But we also know a lot of people want to be in them. I want to be in them when they're acting this way. I think we have to give the market some credit that not everybody is running a 4-to-1 leveraged hedge fund like the one that blew up in July.
So why do you think NVIDIA has underperformed the stocks by 59%?
Multiple compression.
Well, I understand that, but I mean, why? The fundamentals are strong. Because I recently bought it because it has.
I refuse to sell it.
And I understand that.
Yeah.
But is it that they're selling
Circular
NVIDIA?
deals?
Are they selling NVIDIA
Can I give you
and
three answers?
Broadcom? Because both of them have lagged.
I'll give you the three
They're selling
reasons.
them and they're buying this other stuff, which it has much more alpha, which is a little scary.
Because how do you make a $5 trillion stock go to $8 trillion?
Yeah,
It's really hard.
I understand that, but the growth is still there, Josh, and the stock is trading 14 times for 85% revenue.
We're on the same. We're in the same trade. The question is though. Can you envision a $40 billion component supplier to the data center?
SK Hynix pulling back in a little bit.
Than a $5 trillion. So I think we understand like it's harder at a larger market cap to get at. Now, in my opinion, you're right, and that NVIDIA announcement with the Justice League of Private Equity, the stock should be $275.
Right.
Okay, immediately. And if it wasn't a $5 trillion market cap, it probably would already be there.
Well, right, and then we also talk about free cash flow. These guys have enormous free cash flow, $90 billion. It's going to double between now and the end of next year. Some of the hyperscalers are right, but the whole point is everyone was
Netflix looking for more upside.
We're seeing depleted. These guys, it's actually accelerating on top of that.
I think it's interesting though, because when Josh said like the professional investors, we're staying put, right? You're staying put. But what I've seen in the last few weeks is these crazy moves on Cerebras, right? On CoreWeave. That has to be the marginal investor. So with a $59 billion market cap on something like CoreWeave, right, the marginal investor can make a huge impact. The marginal investor can't make any impact.
That's pods. I don't think retail is moving.
You think pods are moving those stocks up 20% one day?
It's a little bit of 2x. There's a little bit of 2x ETF, but I think the buyer of CoreWeave that takes the stock up 20%, and then it gives nothing back.
I think though the thing is the majority of holders in NVIDIA now are the Stephs, are the Joshes, are the mature, buy and hold, going on for a long time. And they just don't have as big a component of marginal investor in them, so they can't move as much. And I think a lot of that move up is just like the crazy town moves, right? It's not that, hey, this is a substantial company.
The crazy town stuff, though, is happening in smaller market cap stocks, higher
Netflix,
beta.
Netflix.
Like that.
Yeah, but that drives the whole index up to some degree. I mean, you know, you couldn't have the stocks up as much as it is.
Netflix looks good, right?
We do have a news update because there is yet another executive leaving OpenAI. Kate Rooney has those details for us. Kate.
Scott, so this is the latest shakeup in OpenAI's leadership team. Chief Revenue Officer Denise Dresser is going to be leaving OpenAI after less than a year. She joined back in December and was a massive hire at the time, CEO of Slack. And many thought she was going to be heir apparent to Mark Benioff when she was at Salesforce. She also has hired a ton of enterprise sales folks over from Salesforce. Enterprise within OpenAI has been the golden goose. It's an area they are very much focused on and chasing. The company now appointing Dali Rajic as its new CRO. He was most recently president and COO of cybersecurity company Wiz, which was most recently acquired by Google. OpenAI says they now have more than 2 million businesses, double from a year ago. So clearly Denise Dresser has helped scale this business. But I mentioned the shakeup. We have news of Brad Lightcap leaving. He was the COO early on of this business. He said he's leaving to do something new. We don't know exactly what yet. We also had Fiji Simo. She was another massive CEO in Silicon Valley who left her CEO seat to go and join OpenAI. She left under different circumstances. She did have a chronic disease, or does have a chronic disease that she's battling with. But Denise Dresser was one of the adults in the room they brought in from Silicon Valley, from very much the software business, to come and try to get enterprises to use AI. So huge news. We'll try to get more details, Scott. Hit the phones. I don't know exactly what happened here, but that's the latest.
And just as you give us that reporting, I'm thinking about the
Netflix hanging on the VWAP, S&P 500.
in the news flow between OpenAI
ABCD pattern, perhaps.
We have a couple of days this week of big executive departures from OpenAI, when today
Futures trying to turn back up, but chopping around just below VWAP.
valuation that Anthropic may go out with. So you continue to get this sort of widening of narratives.
You're exactly right, Scott. One of the factors when we talk about OpenAI and the shakeup is that they are behind, from what I'm hearing, Anthropic in their road to go public. So they have both filed confidentially, but I'm told Anthropic will go first. They're having those important banker meetings. They're starting to go out and sort of test the waters, speak to investors from sources that we're talking to. At the same time, OpenAI is further from that. They have filed, but they're not as far along in the process. But you're seeing the shakeup in the meantime. So it could very well be the road to IPO is a little bit messy in that they're getting their team together. They're getting the people that are going to lead this company. I think Brad Lightcap, it made sense in that narrative that he was a 0 to 1 founder, very close to Sam Altman. Denise Dresser is different. She's the type of executive you bring in to bring a company public. And so it's a little bit more of a head scratcher here.
Yeah, good stuff. Kate, thanks. It's Kate Rooney. Following all things OpenAI.
We're dead center in the middle of GEX.
As these companies head towards a public offering.
77.80. Looks like we might rally here.
I mean, this is. I think we've never before had $1 trillion startups that got the level of attention and scrutiny pre going public as we do in this era. And it makes sense because these companies are not just large, they're important. They're important to public companies that have sales from these businesses as part of their own forecast. So everyone's paying attention. But I think private market companies, venture capital backed startups.
NVIDIA's starting to turn up. NVIDIA.
Anthropic's a 3-year-old company. You imagine if most 3-year-old companies had this much scrutiny on every hiring and firing. It was
Still below the opening range high.
So I think these companies, this is just par for the course. People join firms, they disagree with somebody, that strategy, they leave, they get a better offer. Everybody's looking for AI talent right now all over the world. None of it is surprising. I think it's very distracting for people who are trying to focus on the big picture. But I understand why we're paying attention to it.
But these guys are the big picture, though, because all the spending that we're talking about happening with the hyperscalers is underpinned by spending commitments from both OpenAI and Anthropic. They're 50% of all of these companies' backlog. So they better hurry up and figure out a way to get public quick before sentiment shifts.
Nobody knew who the chief revenue officer was of Facebook in 2011, a year before they went public.
So it seems Anthropic is gearing up for the fall. as we said, what's reported in the last 24 hours, 2 trillion. That would be larger than SpaceX, which just went out. Speaking of, I used that as a segue to get to Stephanie Link, who bought more.
I just keep buying.
Right.
It keeps going down and I keep buying.
Citi reiterated the buy today too. We view space as an emerging opportunity for investors that could reshape many domains.
I just go back to the quarter, Scott. It was so outstanding in terms of overall growth. I mean, total revenue growth of 92%, EBITDA 191%. All three segments beat on the sales line and with tremendous growth. The one that we care about, at least in the short run, is connectivity because that's the profit driver. And that actually, the margins also went higher in that particular division and they doubled their subscribers. We're all talking about the AI piece of it. That's very exciting. 14 billion is commitment this quarter alone. And
Okay, SK Hynix looks like it wants to keep going.
Each year. So I like the story long term. I wasn't anticipating buying it and then buying more on the way down, but it's just, to me, it's very compelling given the growth. And my time horizon is long term.
Okay, so we will take a break and then we will talk about Netflix, the sequel, at least for Bill Ackman. We'll explain. And we do have more committee moves coming up too after the break.
All right, S&P on the move. S&P looks like it wants to go here. Turning back up. S&P turning. Hedge flows rising. Looks good so far. Okay, you're going to get back to 78.10. Looking good.
All right, welcome back. Take a look at Netflix today. The stock's up 3.5% on word that Pershing Square has revealed in its most recent investor letter that it is back in that name. 3 million shares. It's about 4.9% of the firm's portfolio. And this is the sequel. The premiere, if you will, happened in 2022 and was over quickly, because Bill Ackman sold that after only 3 months after Netflix had reported its first subscriber drop in a decade. We made a little wall here to show you. They took a reported $400 million loss on that position. So that was the premiere. I think we all remember it well. Remember, that stock had a massive run to like $700 and then just plummeted. And Ackman was like, I've had enough. And he said at the time, quote, "We've lost confidence in our ability to predict the company's future prospects with a sufficient degree of certainty." Well, they found something because they decided to make a sequel. They revealed that new 3 million share stake on Wednesday in their investor letter. I told you it's almost 5% of the portfolio, which has been somewhat remade as well, which is an interesting story too. And now they say the following: when we first invested in early 2022, investors feared an escalating content arms race among a crowded field.
Hertz turning back up. Hertz. Let's see what Hertz looks like. Hertz. HTZ. Hertz. Looks good. Back to the 20 EMA. Bouncing. Hertz looks like a buy.
So, Malcolm, you get the first crack. Ackman is back in this name.
I don't know what to make of it. I think it's great that we got the 4% pop today on the news. I'll take it. I'm glad that I bought into it as low in the slide as I did, because it gives me plenty of room to take the ride with it. I don't know what specifically he's seeing that brought him back to the table, since subscriber growth has grown, but it's actually decelerating at this point, that he's jumping back into the name. I think that they're probably figuring out ways to monetize the 300 million subscribers they've already got instead of chasing too many additional ones. So I'll wait and see what additional notes they release, but I don't know that it necessarily is going to be a real lift for the shares the way that someone else jumped in.
I feel like this is making a statement that they've won the race, and the others, okay, so you mentioned what's happening with subscriber growth now, but they've only distanced themselves in terms of subscribers and subscriber growth from the competition that was thought to be maybe more robust, at least robust coming in 2022. And now they're back for a stock that's been hotly debated and has had a very bad streak.
There's a Shake Shack burger on the line with this company.
This movie has had bad reviews.
No one wants my opinion.
After Josh's, because he owns the stock.
Yeah, I'm long. I know what happened. This is classic. This is classic Bill Ackman, quite frankly.
Apple, Microsoft, short covering Amazon, Google.
Or pulling like tiny big caps out of his hat. That's not how he invests. He finds unbelievable businesses with a moat, with a great brand that stumble upon tough times or a sentiment shift on the street. And he's patient and he waits and he wins. And I've seen him do this, not all the time, but I've seen him do this with a lot of big brand name type stocks. We've seen it in the past with things like Chipotle, where people thought it was just going to be health code violations forever. They fixed the business, they turned it around, made a lot of money. And I think it's going to work for him in Netflix as well. I'm hoping this sequel is not Squid Game, as a fellow shareholder here. But it's 39% below its highs. It's trying to find a bottom. Has it found one in the high 60s? Maybe it has. This is a stock trading at 20 times forward earnings. RSI is now 58. Although it's been rallying over the last week, it's got a long way to go, nowhere near overbought. They're expected to have 42% earnings growth in the next year. How many stocks can you find in the S&P 500 that could grow earnings 40% and trade at a 20 multiple? I can think of two. Uber is one, which Ackman also owns, and Netflix. There probably aren't many. So are there risks? Of course there are risks. Was there a competition? Yes, we know. But in the end, if they deliver, if they execute, the stock is too cheap. It should be higher. I don't know that it's going back to 140, but it should not be 70.
That's the point I was making about monetizing the existing subscriber base instead of spending a lot of money to achieve new subscriber growth. You already have 300 million customers. That's where your earnings growth is going to come from.
And they're not going anywhere. Their churn rate is very low. They've raised prices almost every year over the last 10 years. And they've added this ad subscription tier for people that said no mas, they didn't want to pay higher. They got rid of the password sharing. They've pulled all those levers. The ad business is growing. I don't think they can get away with another price hike. Right?
Tesla trying to push here. Tesla.
Depressed over the last 6 months, but Malcolm, to your point, I don't think it's necessary. They have sports. They have live.
Tesla looks like it could get something going.
Shows. They have a lot of sequels.
Tesla, TSLL.
Should be enough.
Jenny woke up this morning. It's like, I thought I was in a really good spot to win the burger bet with Josh on the total return debate between Disney and Netflix.
You're winning, but you haven't won.
Channeling.
Correct.
Where I know you were thinking about.
Now
You're like, uh-oh.
No, this is so unfair. That's what I was going to say. So you stole my lines. Thank you very much. I would like to, continue my theme of celebrating the moment and being positive. So yeah, I'm up 30% on our bet in the last 4 months. And I would bet that you're right. Like I'll bet the differential of that, I'll bet that 30% between Netflix and Disney over the last 4 months, I'll bet that closes. Because it is, to your point, a little too cheap. The cash flow's there. The earnings growth is amazing. I think my one pause on Netflix longer run is, yeah, you're right, 40% earnings growth this year, but then it drops to like 7% next year. And 60%
Tesla trying to turn up.
That sounds like a hedge. I'd still rather be in. I'm trying to celebrate the moment.
That sounds like a hedge.
And I'm trying to be
In
short
all
term
seriousness,
for a moment.
would you still rather be in,
I'd still rather be
Disney
Disney.
today?
If
I'd
they
still
buy,
rather be
if they buy,
Because
if
I
they buy
think long
NBC
term-
Universal, if
No.
they buy NBC
Here's the
Universal,
thing.
that's a wild card for the stock.
Here's the thing.
That could be why you have such a depressed market right now.
I think the argument that we started there, I think the investment thesis on that argument remains, which is I do think that Netflix comprehensively
Oops, sorry about that, Jenny.
challenge in this AI world where it's easier to make content. You know, and you and I were talking about this a while ago, and you were saying like, do you still have Netflix as a subscription? No, right?
Yeah.
You do.
No, I do.
Oh, you do. I thought you said you didn't, or maybe someone else said it because they're like, look, I watch everything on YouTube, right? And YouTube has taken over so much. But what I liked about all
Games
that,
on Christmas, you have to have it.
okay, fine, but I don't watch it. But I think the thing is, it is more of a one note business. So yeah, for me and for my strategy, like I still want
A
Disney
one note
because they have.
business. I think
Yes,
I
but
listed all of the
compared to
things on the
Disney,
platform.
compared to
Just set the
Disney,
records
Malcolm, you
straight.
can't even go there. Disney, like, I don't want to open up the whole thing. The point is only, I think the differential closes before year end, right? I don't think we end up with a 30-year gap. So there's probably more upside for Netflix in the balance of the year. In the long term, I still want something that has a more diversified, more analog.
The one note is why I like the stock and don't own Disney. I want the one note. The one note is an insanely profitable business that they dominate and probably will a year from today, no matter what the other streamers do.
All right.
And they don't have to sell churros.
So listen, our bet expires at the end of at the end of December. You'll buy me my burger then, and then we'll consider renewing it for a year.
I think you feed me my burger.
That's gross.
Kate Rooney, please, quick.
How do I top that, Scott? All right. A lot of the news update. The U.S. is reportedly planning to send the USS George Washington to the Middle East to replace the USS Abraham Lincoln. The move is reportedly part of a scheduled rotation plan, but comes amid worries about conditions in that Abraham Lincoln carrier. Families of sailors aboard that ship have voiced concerns about deteriorating conditions amid a long deployment. Meanwhile, the Democratic National Committee is gathering this week in Austin to finalize their 2028 presidential primary calendar. The party is expected to approve a calendar with South Carolina as the first primary on January 22nd. The DNC is also expected to discuss its leadership and fundraising goals ahead of the midterms in just a couple of months. And NFL quarterback Jaden Daniels is squaring off with his alma mater, LSU. The Washington Commanders star sent a cease and desist letter to the school saying it can no longer use his name, image, or likeness. The dispute stems from a decision to allow a current player to wear the number 5.
Oh, wow. What's going on here?
Steph and Jenny are both making trades in one of this year's top sectors. We'll reveal which one. We'll give you the names.
Okay, Airbnb looking strong. Palantir looking strong. SK Hynix at the highs. Netflix looks like it wants to break out here. Watch Netflix has been very strong today. Recent price actions pushed it back above the 50-day moving average. I may add to this one now that it's above the 50-day. Okay, let me just look at this real quick. All right, so we got this. We got the downtrend pretty obvious. I don't need this anymore, so I'll reuse this. Okay, looks like we're breaking above these pivots very soon. Once we break above these pivots, we're above the 50-day, so I'll be adding to Netflix soon. Okay, looking really good here, actually. Need to see more volume on the breakout. Other than that, Netflix looking really strong, pushing back up to the opening range high. S&P is starting to fade now. Probably going to chop people up the rest of the day. Let's see, SpaceX looking for the bounce. Okay, SpaceX looking for the bounce. Tesla, Netflix. Qs, we got more. March 8/15 calls for 53 million. Woo. Looking for much higher on the Qs. Oh wow, that's looking really good. Really nice. Okay, we just got rejected again. Tesla trying to push higher. That looks like it's trying to break out. Tesla and Netflix both doing the same thing. Tesla and Netflix both are doing the same thing, trying to break above the opening range. S&P, excuse me, Tesla already above the opening range.
And that's where we find our moves today.
Trying to get back above the high of the day, I should say. Okay, so the high of the day came after the opening range.
Stock is down 11%, and they are involved in automation and robotics. I think we're in very early innings in that particular theme with huge total addressable market. They're the industry leader. They also have a self-help story, Scott. You know I love self-help stories. Fairly new CEO. It's called Elevate to Outperform, selling non-core businesses, low margin stuff, and focusing on higher growth, higher margin businesses like in rail, power, generation, etc. So it is certainly an AI play as well. Their goals are to grow revenues of 11% by 2028, but gross margins to be up 700 basis points. And so you're going to see a 55% earnings growth rate by 2028. And they've been a great steward of capital, 13 consecutive years of an increasing of the dividend. So 15 times forward estimates.
Okay. And Jenny, you sold Stanley Black & Decker.
I did. So this I bought a little over 3 years ago. I've had a 45% return in it, including the dividend. And when I bought it, the investment thesis was that when earnings stabilized in 2025, they should be about 40% higher. So that played out. It took a little bit longer than a year longer than expected, rather, to get that total return. So 12.
Tesla looking for higher highs.
Certainly not amazing.
Netflix is trying to break out as well.
I think the thing that's more interesting about this, Scott, is that I'm sitting on the cash from it because I don't have anything in this moment here and now to buy. I've got a pretty decent short list of potential candidates, but they're all a little rich for me, and I don't want to bump up any of the other positions in the equity income strategy. So I'm hoping for some messiness in the market that knocks the wind out of something. I can be opportunistic, buy something down 10 or 15%. But that's it. It's discipline. By the way, if you don't own it for the dividends specifically, I think you can keep holding it. The earnings growth ahead is quite decent. It's down to a 3.25 yield. And so for me, from a risk management perspective, I look at that and say, I can get 3.35 on a money market fund. Why take the risk?
What's your floor for the dividend? You need 4% to even consider it.
Okay, for the portfolio overall, I have to maintain a 5% or better dividend yield.
Okay.
So I can buy something at a 3.5.
But it'll drag down your
It'll
average.
drag down. Yeah. And so this is the blessing and the curse of the strategy. It forces a really strict sell discipline. So if you're in it for growth, and by the way, it's a dividend aristocrat. If you're in it for growth, I think you can keep holding it.
Well, you also added the carrier, right?
We added to carrier. That was in our disciplined growth strategy. Now, interestingly, we trimmed carrier several months ago at 80. It's down to 63. So we bumped that up. Huge free cash flow. All the positive trends in the economy that we're talking about, pushing it up. So that we just bumped up as a position. And again, different strategy that was added to it.
Okay. Coming up, Josh Brown's best stocks in the market. Let's
All right, the Qs.
On an under the radar data center play.
Qs.
Just made it on the list.
Okay, let's see. Okay, March Qs. Looks good. March, the Q's 20,000 of the 815s. All right, looking for the Qs to continue. S&P looks like it wants to go as well. Qs. Okay, IWM.
Josh Brown's best stock in the market. The spotlight's on Ferg.
Yes.
Ferguson Enterprises.
Yes.
FERG.
Yes.
Why?
Not Fergie, not London Bridges or Black Eyed Peas. Ferguson. Nobody knows this stock, and I'll tell you why. The company has been around for 75 years, but it spent a lot of time traded on the London Stock Exchange. A couple of years ago, they realized this is stupid. There's a huge discount. We should get back to our roots in Newport News, Virginia. We should get an S&P 500 listing. We should narrow the gap in valuation versus all of the companies in our space that are in the United States. They have done that. I would argue the stock has got some of the credit for that, but there's way more coming because while they've become a U.S. Traded and listed name that people now are becoming more familiar with, they're seeing a big improvement in the industrial side of their business. So when you think of Ferg, I want you to think of cool. It's running water, plumbing, and it's HVAC. And the industrial component, you guessed it, a lot of demand from data centers and all of the other industrial projects that are happening all over the country, all over the world. Ferg is the largest supplier of equipment. And the strategy here is dual contractor. So a lot of people doing plumbing that are also doing HVAC. Ferguson gets two bites of that apple. So the strategy is bearing fruit. Jeffrey says a $289 price target. Put the chart back up because I want to talk about technicals for a second. What's held this stock back is the whole business is an industrial. There's a residential housing component, which we all know. The housing market sucks, et cetera, et cetera. We won't spend any time there. I think the market is going to let this thing break out. I think the buyers are going to take
Okay, Tesla breaking out.
Because at a certain point, housing is no longer a drag.
Tesla.
It's just blah. And you get this data center component that is contributing more and more of the earnings. So it's made 3 attempts to get above 250.
Tesla going here.
3 times. I don't
Tesla.
tops. I think ultimately this thing takes out that high. So what we told people in the pro column, Scott, we're stalking the stock. We're watching its behavior the next time above 250. If the sellers dry up there for the first time after multiple attempts, that's going to be our signal that this baby's ready to break out. It's been on and off the list for the last year. You can see how choppy it's been in this channel. Someday, the sellers will run out of ammunition, and this thing's going to be like a beach ball you were trying to hold under the ocean for too long. It's just going to go. And I think that day will happen between now and the end of the year.
All right. Thank you very much for that. That's Josh Brown's Best Stocks Spotlight. Up next, Mike Santoli, his midday word.
Okay, there goes Tesla taking off to the upside. Tesla above its opening range high and the high of the day. All right, Tesla almost an outside day. Got this gap overhead. Tesla. Okay, semiconductors. All right, looking for more upside. Okay, looks good. S&P about to break out. Q's looking good too. Q's. Tesla going. Google turning up, Amazon turning up, Apple turning up.
Senior markets commentator and overtime co-anchor Mike Santoli joins us now with his midday word. Michael, what are your thoughts on this market today?
Yeah, I mean, for the last week and a half, Scott, the market's message has been there was a window last month for the internal tensions of this market to cause some kind of broader rupture, some kind of a break, maybe. It didn't happen. It wasn't necessary. We got enough from earnings, especially, I think, the big tech platforms, Meta, Microsoft, Amazon, Google, to take the pressure off them at the same time the momentum trade was oversold and you've had this partial snapback. It gets us where we are right now. I still think that the bull case is all about the most obvious stuff in front of all of our eyes just continuing. It's not about something has to change. I think CPI and PPI removed potential negative catalysts that are now in the rear view. So that can work for a while. I still am on alert for this idea that the market's going to discern that we're over earning. We're not going to get as much rebuild of
trader leverage and crowding and maybe valuation to get us back to where we were in May and June.
SK Hynix holding the high of the day. Looks good.
Grind away right here. You know, I think that's good enough for the moment. But I'm on alert for the fact that maybe things seem a little too benign.
Yeah. I mean, as long as as we said at the very top of the show, as long as the earnings picture remains what it is, and then if you pile on top of that the extraordinary gross margin protection or growth or what have you, it's two pretty powerful items.
But that's exactly what I'm saying. I mean, you know what a really great time to load up on stocks is when margins are depressed, and then you get the big upside. And when they're already at all-time records, and they have not mean reverted in a long time, I think that's the story. It's not the story for tomorrow, but longer term.
I'll see you later. Finals are next.
All right, looking good. All right, Tesla breaking a bit higher. Google turning up. Google's got a lot of work to do over the next several weeks, next several months, to get back to where it came from when the head scientist that over there decided to exit. The stock took a hit, and we've been trying to get back above the 50-day ever since. Sandwiched between the 50 and the 200-day. Kind of dead money for now. Google, there's really no momentum. It's trying to push right here. Intraday is a different story if you're going to trade intraday. Okay. Tesla trying to go again. Tesla. Need the volume to pick up a bit more. Volume looks good though. Almost an outside day. You get the point though. It's a pretty decent day today on Tesla. New York Fangs, let me go check that again. Make sure that we're still looking good. Junk bonds are higher. Junk is higher. Okay, above the 50-day. That is a big plus, okay? Junk bonds. JNK, JUNK. Junk, JNK. That's the 50-day. Active indicators. 50. Junk bonds looking better. Okay, the 10-year yield also moving low. Our junk bonds look good here. Junk bonds. Let's see what New York FANG looks like. That's giving us a thumbs up for the Qs, for tech in general. New York FANG looks good. I need to see Microsoft catch a bid, maybe. That would be helpful. Same with Apple, Amazon. If we can get those bid, we should see a follow through. Okay, S&P turning back up, looking good. S&P.
It's time for finals. Malcolm Etheridge.
Yeah, I'm going Netflix again. Won't be trading at 20 times forward forever.
Jenny.
Cisco, get it on the weakness.
Stephanie Link.
20 times forever. Yeah, that's pretty good.
CrowdStrike now up 100% over the last 52 weeks.
CrowdStrike. Yeah, the security stocks looking good. CrowdStrike. Looking for the breakout. Zscaler started off the week strong. It is looking the best. Coming off the lows. Zscaler. Coming out of this base. Okay, so Zscaler looks good above this level. It'll technically be breaking out of the base.
6% for a 30% 2-day gain. This comes even as Cisco, yes, sells off post earnings, down 9% now. It is weighing on the Dow, which is negative. And we'll debate Mark Zuckerberg's manifesto this week, calling for the need to open source AI. What would be the implications, business-wise, of all of that? Plus, our restaurant stocks about to break out. Seems hard to believe anything could rival the AI trade, but Jonathan.
Okay, let's see what XII looks like. S&P 500. S&P breaking higher.
Many originally thought would be lucky to hit by year end. It comes after this morning's producer price data.
Can we get to 78.10?
Last month, despite expectations for
Can we get to 78.10?
does have yields down across the board today. The 2-year and the 10-year dropping about 6 basis points at last check. Charles Babrinskoy is the vice chair over at Ariel Investments, and he's here for our opening exchange. Charlie, it's great to see you again.
Hi, Kelly. Great to see you.
Let's see how long I can go without talking about the Lakers. But was that why?
Don't go anywhere without talking about the Lakers. That's spectacular news.
Because, what? Okay, so I'm watching this, but shares of MSG.
And you're right, it has actually been a fairly 10-week when you assess, I mean, some of the price activity. Although I did misspeak, I said that we were higher across the markets for the week. The Dow right now facing to be slightly negative here, so that is something to consider. Well, I mean, like Nasdaq leading out in front up about 1.3% now on a week-to-date basis. But now let's focus in on, of course, all of the volatility and these individual stories that we'll be focused on throughout today's show. We'll be looking at Cisco here, which is now pulling back about 8.8%, as well as Tapestry, one of the worst performers in the S&P 500 today. It's down about 15%.
Zscaler.
And then we will look at more of the positivity.
Looking good. Zscaler.
Which is up 5.2%, as well as Birkenstock rallying after its earnings, and some guidance that signaled really strong brand awareness. And
okay, what about Datadog? Datadog started off the week strong. Okay.
But to dive into our first mover
Trade Desk is turning up. Looking more bullish. Trade Desk.
Support the top expectations on both the top and bottom lines. The company reported quarterly revenue that rose 18% from a year ago, while earnings also easily surpassed forecasts. AI remains its biggest growth driver, bar none, really, with Cisco booking $4 billion in infrastructure orders during the quarter and $9.3 billion for its fiscal year. The company also issued stronger than expected fiscal 2027 guidance. But still, investors appear focused on margin pressure that's tied to the broader shift.
Snowflake turning up. Tesla keeps moving here. Tesla.
Heading into earnings. After rallying sharply this year, it seems the market is continuing to demand, nearly perfection from some of the biggest beneficiaries of the AI build. And so unfortunately for Cisco, as the
Cerebra is still diddling down here at 228.76.
we've only pulled back even further throughout the session.
Yeah, the stock's down now 9%. Earlier when I was discussing this stock on
SK Hynix looks like it's going to go again.
About 7%. Pre-market was down about 6%. So to your point, it has worsened as the day has gone on. I thought the numbers looked pretty good though. So to me, this is a story of, what are we going to assess and sort of handicap the AI picture. They're very reliant on hyperscalers. And I think there was some analyst commentary around the AI outlook, maybe not as impressive as some had hoped. And certainly the margin story pressured a little bit when you look at it from that perspective. All in all, though, this has been a nice story, I would say, for the year. And when you look at Cisco, and we'll dive into it a little bit more with Rick when it comes to the chart. But this is a name that, going back to last quarter, had a huge gap higher. For the most part, it's held on to those levels. We are back kind of towards those post-earnings lows for that most recent area. But you kind of look at this as a microcosm of the overall market. We're sort of in this consolidation phase for this stock between about 110 and 130, more in the low end of the range. So we'll see if the numbers are enough to maintain this range or if it breaks down and maybe test that $100 level going forward. Analysts, for the most part, pretty mixed, but 2/3 in the buy camp, 1/3 in the neutral or hold camp. I didn't see any sells. I don't know if you saw any.
No, I have not seen any sells, but I will say that this name, of course, now second worst performing stock in the S&P 500, and more significantly, a pretty considerable drag here on the Dow in real time. So seeing a bit of course, volatility to the downside on what was, again, a pretty strong report, and Cisco does still remain up about 46.4% this year and about 60% over the last 52 weeks or so. But we'll get, again, more into those charts coming up later. But our next mover today is actually the worst performing stock in the S&P 500, and that is Tapestry, pacing for its worst single session since 2020. But this comes after the retailer issued 2027 guidance that fell short, offsetting an otherwise pretty solid quarter. Top and bottom line metrics did both beat, driven by strength in its Coach brand, where sales climbed 15%. But the focus was more on the continued weakness in Kate Spade, where revenue fell roughly 7%. Management also did state pretty outright that the turnaround for the company is taking longer than they had anticipated. Looking at Tapestry forecast sales between 8.4 and 8.5 billion for 2027, which at the midpoint did mark a miss. The company is still adding customers.
S&P is still pushing a bit higher. S&P above VWAP.
This year, while margins also continue to expand and free cash flow remains relatively strong. But shares now, are considerably off of their yearly highs, as we are still slightly positive here today, up about just shy of 2%, but we're off of those highs of the year, which we saw, not just 4 sessions ago, by 21% nearly.
That's what I was going to say. This has been a really tough week. And look, I know it's not a perfect report. I know this has been a winning stock, especially over the last, year, 3 years, even with today. But to basically enter bear market, cut through every possible support line you want to draw, as Rick will go through, this is a complete
Looking pretty good here. Nice little reversal so far.
See in these numbers the disconnect here? I guess
Looks like SK Hynix wants to go.
21% reprice in a week in these numbers.
To me, it's right now, I feel like if I could take it, and this would apply to any company, it's the fact that they were very honest in some of their forward-looking expectations, and it wasn't super optimistic.
Yeah, I totally agree. I understand the story wasn't the most rosy story, but it's also this isn't an AI chip stock that's priced like it's going to go 10x. It's a relatively understood business model. I'm always shocked by any of these non-tech companies that are repriced this dramatically, because it's unless they literally told you something that was completely unforeseen, they didn't reinvent the wheel. They didn't reinvent the purse. This is a pretty relatively understood, again, business model. But tough week through the 200-day moving
S&P going
below the 200-day moving average. Didn't even test it really. We tried to rally back and I guess kind of test it from the downside earlier today. But not only have we opened, we have moved lower as the day has moved on. So really tough day. As you said, it's the worst performing name in the S&P 500, down over 50%.
SK Hynix is going to go here.
But to me, the story is that it's been a 3-day slide to remember for this stock, and I'm curious to see what Rick wants to look at for this chart, because you can really draw some resistance points now. There's a ton of price activity to the upside, but you really got to go back to, I don't know, a brief period in late January or
SK Hynix about to break out.
To kind of the fall of last year to get any relevant price activity to the downside.
Yeah, and I totally think it's a good point. I mean, to see this extent of selling today is unusual for retail that is not necessarily, I mean, been resilient by any means, but at least has seen, I mean, not as much volatility. But hey, it's an interesting way to look at what is truly like the K-shaped economy, because Tapestry does operate more of that high income type consumer market. So it's interesting. And I wouldn't even say this name was, I mean, relatively expensive. I guess it trades at a forward PE of 17 times, but you know, we talk about tech so much, to me that feels like a relatively tame valuation on a forward basis at least. But we did just, of course, break down the latest in the earnings and fundamentals of both of those stocks. But after the break, we will continue that discussion by diving deeper into the charts with our chart master.
Tesla looking good. SK Hynix looks like it wants to break out.
In September, it's not hard to jump up the bar when the bar is low.
And Neil, I think we might have just solved inflation with diarrhea. Like, we tell people that gas comes diarrhea, prices will go down. We might be onto something here. I think it's still important to zoom out to get a little broader perspective. Grocery prices year over year still
Okay, SPX looks like it wants to keep going. S&P 500, SNDK, SanDisk.
Respectively, coffee up 10.3% higher in July than 1 year ago, and so we're still seeing
Mic check. Okay.
Higher cost compared to a year ago. Although we're seeing some signs.
SNDK at the high. SK Hynix having a good day. Hertz, HTZ at the highs. Hertz. Micron turning the corner. Micron. Big move on Micron, turning back up. Rob Hood, Micron looking better. Marvell, Lam Research, LRCX. What I'm looking for are some pullbacks that are just below the opening range high, or maybe back to the opening range high. We had an opening range breakout earlier. Looking for a follow through.
Inflation is moderating and job market is weaker than we expected. There's going to be another inflation.
LRCX. Lam Research looks good. Seagate Technologies.
Has been above this 2% target. I don't even know why it's a target anymore. It's been above 2%.
What is NVIDIA doing here? NVIDIA
is eating away at Americans' incomes. Inflation is
okay, NVIDIA looking like it might want to move back up. NVIDIA. Okay, goes NVIDIA.
Came in at 3.2%, and the inflation report yesterday showed that inflation is growing at 3.4%. You don't have to be an economist to do the math there and say that, okay, actually, my real income, my income adjusted for inflation is actually negative. So the inflation report, yeah, B, maybe if I had to give it a grade, it looks like there are some hopeful signs, but things need to come down to give Americans some relief.
That's right. And I think with all of the geopolitical uncertainty as well, particularly geopolitical uncertainty that ties so heavily into the energy sector, it's hard to forecast where that is going to go and therefore where energy prices are going to go. So we'll have to stay tuned for these new reports to have a sense of what September might bring us. I have good news for you if you're one of the tens of people who have looked around and thought, you know what? I need more AI content in my life. Roku has launched Fairground AI Creator TV, a 24/7
S&P, watching S&P here.
AI-generated content on a loop. That's right. While Netflix has Stranger Things and Hulu has Handmaid's Tale, Roku now has plot lines like chimpanzee smokes in zoo and gets arrested, or what if Sherlock was a woman? The key component here, users are not paying for this content. It's part of Roku's fast or free ad-supported TV.
S&P pulling back now.
Any other non-AI generated channels are available for free to all Roku users, and sometimes you do get what you pay for. However, Roku's overall strategy of focusing on free content in a landscape dominated by streaming subscriptions has paid off handsomely for the company. Their user base now exceeds 100 million global households, and Fox reached an agreement to buy the company in a deal worth $22 billion in June. Neil, it appears that it might just be the big screen that is the last screen standing when it comes to not having AI slop.
The reviews of this channel and this content were so funny. The Verge compared it to eating from a trough. Futurism wrote, Roku's giving the masses what they never asked for, an unending conveyor belt of AI slop. But I think The Guardian takes the cake in terms of the king of bad reviews. They wrote it was categorically catastrophic.
Tesla trending, looking for more upside. Tesla looking for NVIDIA to do something here. Okay, we were going to look at XAII before. XAII. XII. Okay, this is looking pretty good for follow through. This is what institutions are up to. Okay, so if the institutions were sellers, you'd see red sticks. They don't appear to be sellers.
A chimpanzee in an enclosure in the zoo that was seen smoking a cigarette, and it set off some nationwide panic for some reason. And you know what? It was really bad. It was really bad. It was almost so bad it was good, but it's very interesting to see what Roku is trying here by feeding us AI slop. And I think it's important to mention, look, Roku cut its name by
NVIDIA looking for more upside, watching NVIDIA.
Roku City. People just love having Roku City or Roku screensavers up on their TV. In many ways, this kind of resembles that because
okay, we're above recent highs from last week and this week.
And see whether this kind of content plays, because the most important thing here is it doesn't cost anything to make an AI programming or 24/7. Imagine if you actually had to pay humans to make.
Okay, so we want to see a close in the upper half of the daily range. S&P turning back up. What are the Qs doing? Qs at the highs. NVIDIA.
Yeah, I think you're spot on with the background assumption. This is just meant to be on, hopefully mute in the background. You look over, there's a chimpanzee smoking a cigarette. You're like, that's funny. You get back to doing what you're going to do in your living room. I do feel like they've created a solution to a problem no one had. I don't think anyone was necessarily asking for this. However, I do view this as like almost like a random like art form, low art form.
Micron looking good.
It's so absurd. It's so bad it might actually be good. And all of us, when we read the story, we're like, I have to go see what they're cooking up here. I also think this could be big at college. Can you imagine the AI slop channel drinking games would be absolutely incredible. So
I was thinking another kind of substance that people like to do at college.
Maybe. Won't comment on that, but I think there's some potential here for universities to really embrace the Roku AI channel.
I will say it's easy to write off AI slop and people won't watch it, but my mind goes back to AI fruit videos. Did you see these on social media?
All over TikTok.
People were watching these like crazy. Sometimes people do like watching AI content. I mean, AI Fruit Love Island got more viewers than the actual Love Island. People were obsessed. I don't know any of these people, but people were obsessed. So I wouldn't write this out. It's easy to laugh. It's easy to say, oh my God, Dr. Phil, when I saw his face, I nearly cried because it was a human. People seem to like this content, at least some people. So we'll see where this goes. I think it's very easy to laugh it off, but we'll see where this goes.
And the argument for Roku and Fairground has been every new art form in any TV streaming, YouTube is originally kind of laughed at. It feels so foreign and not what we're used to, and maybe not even what we're asking for. As the technology gets better and people get more used to it, maybe there could be a hit upcoming, and we'll definitely report on that if it happens.
Okay, don't go anywhere. We'll be right back with Neil's numbers right after this.
Tesla looking for more upside.
Can't miss signage that makes people stop, look, and shop. With vibrant banners, outdoor signs, and more. Just think it, click it, and print it with Vistaprint. Print your possible with 20% off your first order at Vistaprint.com.
You bring it, we match it. Earn up to $3,000 for all qualifying funds. 3% cash match. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
What is Spectrum Internet? It's the most reliable internet. It's connecting with my followers out there.
And in here. It's secure internet for you and your family. Keeping kids like us safe online. It's Wi-Fi that stays on even when the power doesn't.
Stay connected no matter what.
So what's Spectrum Internet? It's everything you want it to be. Switch today at spectrum.com. This is Nick's period underwear. This is Nick's period underwear. Still Nick's period underwear. They're just regular undies with a seamless built-in liner that hold up to 8 super tampons and wash just like regular underwear. Wear them to break a sweat or to work, to refuel, or just relax for a night out or a night in. It's just better underwear made for real life. This is Nick's period underwear. Get yours online at nix.com. That's
Okay, we got SpaceX starting to turn. SpaceX turning.
Should fit the life you built. Insurance Allies connects you with licensed insurance agent to compare Medicare, life, final expense, and health options. Clearly,
SNDK.
no pressure or obligation. Get your free quote now. Insurance Allies is not a carrier and is not connected with or endorsed by the U.S. government or Medicare.
People always ask if I cook the same way at home as I do at my restaurants. The answer, yes.
S&P breaking out.
Darn chef Nancy told me. To make truly delicious food, you need the right tools. With HexCloud's hybrid cookware, I get unbeatable searing power, easy cleanup, and equipment durable enough for both my kitchens. People think I'm cooking for the crowd, but I'm just cooking for one person, the one taking the next bite. Performance, no matter the kitchen.
Now it's time for Neil's Numbers, the segment where I share 3 stats in the week's news that will help you pretend you know things. For my first number, has someone told private equity about Facebook Marketplace? Because it's hoarding a ton of assets it can't get rid of. Private equity firms held 33,575 unsold companies in their portfolios, up 1,000 in the last 8 months, and more than double a decade ago, the New York Times reports. This unsold inventory strikes at private equity's business model, which promises to return money to investors after selling the company or taking it public. But now those deals are drying up. Since 2022, just 70 PE-backed companies have gone public in the U.S., compared to 424 from 2017 to 2021, according to the Times. Meanwhile, PE firms have not found many buyers for these companies either, because often they're selling to other PE firms that are going through the same struggles. Those struggles come from multiple sources, most notably, 1, rising interest rates, and 2, problems in the software industry. When it comes to interest rates, PE shops often rely on large amounts of debt to finance takeovers, so when borrowing costs rise like they have been, the whole proposition gets more expensive. Second, many private equity firms loaded up on software companies back in the heyday of 2021, but since ChatGPT was released a year later, investors have soured on software over concerns AI will eat into the market. It all amounts to a private equity industry that has been lapped by broader stocks. From July 1st, 2022 to March 31st, 2026, PE firms generated annualized returns of just 6.4%. The S&P 500 gained more than 15% over the same time span. See you taking out the world's smallest violin over there.
You got to feel real bad for the PE guys. I mean, it goes back to our Lakers story. You have VCs buying sports teams. You have PE people stuck holding an old CRM platform that's been rendered obsolete by AI. So my advice is to pick your field wisely.
For my next number, Americans love to travel. You know, you've probably been to Paris 3 times already this year. But some stats from the Wall Street Journal reveal just how astonishing the rise of the American
SNDK, Micron.
1990, and fewer than 5%
He's looking
of
good.
Americans had a passport. Today, the share of Americans with a passport stands at 50%. Last fiscal year, the U.S. issued 27 million passports, a new record. And they're using it mainly to go to Europe. Visits to Portugal are up almost 5 times compared to a decade earlier. Greece saw 4 times as many American visitors as 10 years ago. And it's not their first time across the Atlantic either. Just 6% of U.S. travelers to Europe said it was their first time flying abroad. One catalyst for all the traveling is flights are cheaper than they used to be. In 1984, a round-trip weekend flight between New York and London cost the equivalent of $2,150. These days, you can regularly snag a flight for less than $1 grand. Driving the travel boom are wealthy boomers and Gen Z, for whom travel is no longer a nice to have.
SpaceX turned the corner, Tesla higher.
It's hard to articulate just how profound
SpaceX showing buy signals. SpaceX is showing a buy signal off the low.
city to try some TikTok viral pastry. Yardlet.
I mean, shout out to Estonia for sure. It's interesting. There used to be this maybe stereotype that Americans didn't have passports. Now more than half of Americans have one, and the U.S. issued a record 27 million passports in 2025. I just have to say one thing about the 24 million travels to Europe. I swear, 22 million of them have been to Portugal. Every single person I know is going to Portugal, gone to Portugal, talking about Portugal, getting married in Portugal. It's like me and 3 other people who haven't been to Portugal. So their tourism department is absolutely crushing.
It was me last year. I mean, you're out of try Fauna. That stuff is crap. Well, the one thing that's interesting to me about this, and we're not going to belabor the point, but I just throw it out there, is how much has Instagram played into this? How much has the rise of Instagram, TikTok, social media created such a FOMO atmosphere, highlighting various things that people can see that they feel are more authentic to these countries, and how much that has driven all of this tourism by Americans going to faraway places, most specifically Europe. Just throw it out there. I think it's a big role that it played. For my final number, you know how there's been an air traffic controller shortage that periodically cancels your flight? The FAA thinks it might have solved it by hiring video gamers. On Monday, Transportation Secretary Sean Duffy announced the FAA has hired over 2,000 people to control the skies, the most in a single year, after launching a campaign to recruit gamers. The agency says it's now 94% to its hiring goal, the fastest time ever to reach that target. But wait, if you're good at Halo, does that mean you're good at landing Southwest Flight 113 at BWI? Could be. When announcing the gaming recruitment drive in April, the FAA said, quote, with only about 25% of controllers holding a traditional college degree, this effort is focused on reaching talented young people pursuing alternate career paths, many of whom are active in gaming. Feedback from controller exit interviews reinforces.
All right, SpaceX starting to move now. Added to the October 50 deltas. 50 deltas are $13.15. I split the bid ask. I have the 150, 160 call spreads. A good bit of interest, a good bit of volume there so far, and open interest.
A lot of former 8-year-old boys are extremely vindicated right now.
Let's bring to the finish with some final headlines. British politics often borders on the absurd. They've had 7 prime ministers in 10 years, after all. But today's parliamentary election in Clacton might just take the comedy cake. The main challenger to Nigel Farage, the leader of the right-wing populist party Reform UK, is Count
Palantir going to Palantir.
Who says he's an intergalactic space warrior from the planet Sigma 9. That man is
All right, Palantir looking better. Palantir looking better. Trying to get back to the opening range high.
Bitface is a familiar face, having run for prime minister multiple times, as well as for mayor of London. He hasn't made much of a dent, with his best showing earning 1% of the vote. But this campaign against Farage has provided him his biggest stage yet, with loads of media coverage, even if he's expected to lose in a landslide. Kyle, I'm not sure how Bitface doesn't pull off the upset today. Among his proposals, cut your taxes and raise everyone else's, arcade grabber games made fairer so players actually have a chance to win, and nationalize Adele.
He has also promised to try and bring back Pluto as a planet, so all I have to say is, yes, we tin can.
That's all the time we have. Thanks so much for starting your morning with us, and have a wonderful Thursday.
Let's run it back tomorrow.
Who you hired us from? You might want a little more info than we're like. With Thumbtack, you can see licenses, insurance, background checks, and photos of past projects, all in the app. Plus, the pros we know have over 14 million.
Okay, Palantir trying to go here.
So you can hire with confidence. Thumbtack, we know homes. Hire the right pro today.
Doctors recommend turmeric more than any other supplement for joint health. I trust Cunol Ultra High Absorption Turmeric, made with the #1 doctor recommended form of turmeric, clinically tested to support joint health and a healthy inflammation response. Cunol, the brand I trust.
Hey there, I'm Gabe.
I'm Hudson.
And we are
Plant people, they met on a hike and we started talking about our respective spine surgeries. How we want to take pharmaceuticals on the way to recovery. We identified the importance
Tesla stalling.
to bridge the gap between practitioner quality formulas and what people are often finding, not finding on shelves. We have created this suite of the world's most beautiful, delicious, effective, clean gummies that you can find in not many places.
Stronger, not smaller, has always been about showing up as the strongest, most authentic self, whether that's big hair, big personality, or a big voice, especially as a Black woman. I see so many women chasing skinny, trying to shrink themselves down instead of chasing a version of themselves that takes up space. And on the latter, I get to remind thousands of women every
Palantir looking good.
why be smaller versions of yourself when you can get stronger. I'm Dr. Robin Barrett, senior coach from Stronger, not smaller.
If you think you can't get good car insurance at a great price because your driving history isn't perfect, think again. At Freeway, we don't care if you have tickets, accidents, or even a DUI. Freeway has the options to meet your needs. Call today to get the best insurance options at the right price. Today's your lucky day. Call us now for a free no obligation quote.
Freeway, official insurance partner of NASCO. 800-676-3021. 800-676-3021.
The purpose of engineering is to unlock performance. This is a hex lap panel with hybrid technology. It perfectly balances durability, searing power, and non-stick cooking performance. Its purpose is to help F1 driver Yuki Tsunoda pursue his dream of cooking a steak for me, right here.
Thanks for letting me borrow your pen.
Thanks for letting me borrow your car. Wait,
what?
I stood in front of you on Wednesday. Went on how earnings from CoreWeave and Supermicro were great signs for the AI trade. And today, I returned to prominent tech stocks getting drilled. I think these are more company-specific pullbacks rather than red flags on AI, but they are indeed worth quickly mentioning today. Cisco had a great quarter, offering strong outlook, and the street is concerned on if the
Tesla, what are you doing, Tesla?
We've already done 2026. Then we'll get to the next
Tesla. We got some NVIDIA.
Cerebras shares of the up-and-coming NVIDIA rival getting blasted as sales of its physical hardware division oddly fell 23% in the quarter. CEO Andrew Feldman.
Okay, S&P fading.
Effects of uneven delivery schedules. Whatever the hell that gibberish means. It's ridiculous. On my LB roundtable, we have Nicole Inouye, HSBC head of equity strategy for the Americas and Yahoo Finance Markets, and data editor Jared Booker. Good to see you all, Jared. I'll come to you because you've been rocking all morning long. Got a lot of stories hitting our site. Chart of the day, you name it. Like I mentioned in the opening, yesterday was a good day for tech. See the sell-off.
Okay, Hertz pulling back in a little bit.
You know, August is rocking here. I was just checking out the Wi-Fi Interactive. Let's zoom in on that.
Who's reporting tonight?
This is just the site correction. So we are 9 days in.
Anybody interesting? Let's see.
Is up 8%. That is the big leader there after materials and healthcare and industrials.
Okay, tonight, Applied Materials, 6% move expected. 6%. Applied Materials.
Then we got EWI, that's Korea. That is a huge chip trade. Then we got quantum here. I'm circling that up 11.5%. IPOs, software.
Applied Materials looks like it's gonna go a little bit.
We've got tech firing on all cylinders right now, from chips to software to even biotech. And this is something we've seen a rotation between software and chip stocks over the last few months. And chip stocks that largely went out. But in the month of August, things are rocking here and they're moving together.
Okay, I'll pass on Applied Materials.
tech trade.
They're expecting 6%. Could see more than 10%. That's $50.
Well, we think so. You know, we're risk on looking at.
So you need to be up here near 630 if you're going to sell overhead and below.
You know, you mentioned some names that are very company specific, but you know, looking overall,
I would say below this Bollinger Band. So if you sold outside the Bollinger Bands, you're probably good.
Earnings beats are above 85%. And really, you know,
Okay, the Qs. Okay, the S&P pulling back now. Qs, S&P pulling back pretty aggressively.
What you're seeing in the tech sector is some valuation compression still, even after this little bit of comeback we've seen over the last week or so. So, you know, they're not really paying up for this strong earnings growth that we're seeing. So we still see a lot of value there. We like semis, we like the tech hardware, software in that order. So we think there's more room to run on this tech rally.
Hey Brian, real quick, I just want to add, if we can go to the Wi-Fi Interactive, I'm writing this up for the weekend. Nicole was talking about, you know, we've seen an incredible run here, and we have had a bear market reset without the bear market. And so stocks are cheap, to Nicole's point here. And the tech market has totally reset. This chart goes back to the dot-com boom and bust of early 2000s. And this shows the tech forward PE, its 1 year change. Right now, it is down 30%. I'm circling that right here at the right side. And it has only been at this level or lower over the financial.
S&P just pulled back a bit. Palantir at the highs. S&P pulling back from the highs. Looks like it could roll over here.
But we got this without having to pay the piper with a bear market or a recession. How did that happen?
Looks like we're going to flatten out right along this area. Very choppy.
30%. We have earnings go up 80%. So you do the math. P over E. Guess what? Things got cheaper. Amazing.
Jared, you want to get me excited? You could do two things. You bring me energy.
Looks like Airbnb wants to break out. SpaceX looking a little better. SpaceX trying to break higher.
Why do you like software here? Because software has been beat up.
Yeah, no, software's been beat up, and you know, when we look at tech, when we look at the order that we like, again, it's semis, then it's hardware, then it's software. Software, you need to be selective. So, you know, I think that's what we've always said at the start of the year. It's you know, a little bit less broader base. There's more concern about disintermediation from AI, of course. So, you know, on that, you know, you need to be more selective, and it's a little bit broad based. But again, that is one of the sectors. Again, we see massive valuation compression because earnings are coming in strong, fundamentals are good, but you are not seeing that.
What's semis doing? Semiconductors at the highs. Turning the corner like everything else. Micron, SanDisk, memory, and semiconductors are all looking good. SNDK. SNDK, large amount of buyers early this morning. You can see that opening range breakout. Beautiful.
Yeah, I think part of that.
All right, SpaceX looks like it wants to go some more. SpaceX looking good.
You know, beginning there, everybody was expecting Fed cuts. Now they're in the Fed hikes, and you know,
okay, what's Cerebras? Cerebras is still sitting there at the low. Okay, that's dead. It's a good thing we took off the CBRX shares yesterday.
Additional kind of tailwind.
Okay.
In general for tech overall, as the market starts pricing out those rate hikes, and again, we expect the Fed to remain on hold this year and next.
Great insight. Appreciate it, Cole and Jared. Thanks so much. All right, this has been a really one of the biggest weeks in the business of sports in years. Former Disney CEO Bob Iger, the man who bought Pixar, Marvel, Lucasfilm in 21st.
SK Hynix hanging out at the high. SpaceX trying to turn.
Personal and audacious benefit career. He's agreed to purchase the Los Angeles Lakers with friend and investor Josh Kushner for a cool $12.5 billion. Throughout private equity powerhouse Apollo Global Management just wrote a massive $2.6 billion check to the New York Yankees. The financing will help the Bronx Bombers in key areas of its sports empire. And if you need one more data point that the business applies.
And no question, if you're an NBA,
Tesla looking a little better here.
You saw this news yesterday and you smiled and you understood that your team
Tesla trying to break.
a little bit more than it was.
TSLL trying to break out.
There's other things about
Tesla.
the Lakers that are truly unique, right? And this is the Lakers are one of the three, alongside the Knicks and Warriors, most valuable teams in the NBA, and they are head and shoulders above everybody else. This is a premium sports asset.
Right, trying to break through this level. Tesla.
Not just in the United States in sports, but in the world in sports. So it's not like every NBA team is now worth $12.5 billion. But we're seeing so many trades. The NBA trades so much more than other leagues, right? The NFL, you see 3 or 4 transactions every decade. The NBA, we're seeing them at a very steady clip. The Lakers just sold 8 months ago, and now they're selling again. So in some ways, you get a better sense of what NBA teams are worth because we keep getting benchmarks and keep getting data points that show us in transactions, which is not true.
Evan, if you're James Dolan and you are literally sitting on top of the world right now, you just won the title at One West, you're feeling good, you've had all your parties. Does this transaction make you sit back and think, well, I'm in New York. Why can't I get over $10 billion or $13 billion for the Knicks? And is it time to sell right now?
I think he could probably get more than $12 billion for the Knicks. I mean, that's a personal question for Jim, obviously. And there has been smoke and rumors about the Knicks being for sale for so long. There was a while ago where I would have said people aren't going to sell teams right after they win championships, but the Seahawks and the Celtics just sold in the past 2 years in the months after they won championships. So there's always
Nvidia turning back up.
About the Knicks.
Okay, S&P trying to bounce.
Traded teams like the Knicks are, where
Apple turning, Microsoft flat.
Really don't, by facts, don't value
Snowflake looking for a follow through.
It seems like private markets do. So I wouldn't hold my breath if I was a Knicks fan and wanted Jim out that he was going to sell. But yeah,
Netflix fading from the high tends to do that.
Kind of reframe, I think, what the market.
Palantir trying to break higher. Palantir.
They were looking to sell.
SpaceX.
What is a well-regarded, now former CEO?
Okay, double bottom on SpaceX.
Whatever it is. What does Bob Iger bring to the Lakers?
H Plus tablet.
S&P turning up. Okay, we're trying to get SpaceX back up through VWAP. We've got 2 hours and 8 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. August the 13th.
When life shifts, the body is to your step. It's why I feel mine. Mind Body Green's creatine and protein. Creatine builds green muscle to keep me strong. While taurine keeps my mind sharp. I can catch everything. Strength isn't always left. It's always right. Fuel your body with Mind Body Green's creatine with taurine plus. Feel how strong.
People always ask if I cook the same way at home as I do at my restaurants. The answer, yes. A Michelin-starred chef Nancy Silverton. To make truly delicious food, you need the right tools. With Hex Class Hybrid cookware, I get unbeatable searing power, easy cleanup, and equipment durable enough for both packages. People think I'm cooking for the crowd, but I'm just cooking for one person, the one taking the next flight. Performance, no matter the kitchen.
Half protection is not enough. Using old school online protection is also not enough. Get NordVPN with a built-in next-gen antivirus. Avoid online scams, malware, and phishing. Get NordVPN with a next-gen antivirus today.
This is like the operating system for those sites. Weekly workout plan, programmed by an expert coach. Personal trainer in the air. Team Christian coaching. All designed to keep you on track. You your consistency. Your workouts, meditation.
You just get sell the news events on earnings day. You know, the day is the company beats on earnings, we get strong down, and really strong. And yet, the stock sells off because investors reason all this stuff was priced in 6 months ago. For example, this comes San Francisco shares like companies can never solid. So its outlook at the sturdy is worried about results being sustained.
Meta turning back up.
Good to see you again.
Meta.
You know, what do you think of the stock market?
Yeah, first off, great to see you, Brian. Thanks for having me. Yeah, I don't want to comment on the stock explicitly, but really proud of the teams. We had a record Q4. I'd say the company's really hitting on all cylinders right now. If you look at revenue, operating margin, and EPS.
I just reduced the volume a little bit on the mic.
Q4. And when you look at orders, sort of forward.
NVIDIA turning up.
We saw double digit.
Okay, we got Airbnb breaking higher, Airbnb breaking out.
So really overall.
Airbnb. Thinking about selling some premium Airbnb. Let me see what that looks like. Airbnb.
Yeah, I think
Airbnb.
The street was expecting kind of 9% top line growth, and we actually above consensus almost $4 billion for the year, and gave 15%. And the question is, are you being too conservative? Is there a slowdown?
Airbnb.
Top line growth for FY26, it was 12%. We're looking for 3 points acceleration to 15% in FY27. Same thing on the bottom line. Another 3 points acceleration with really strong operating leverage with bottom line.
Okay, SpaceX is trying to push a bit more.
This is the second straight quarter where I've seen rates from Cisco that I have not seen in some time. Really double-digit growth in many parts of your business. The street may not be appreciating this today, but I certainly am. What are some of the top drivers in your business today?
Yeah, so you heard Chuck talk a little bit about this networking super cycle, if you will. And really, as you go across the business, I would say we're seeing a tremendous amount of strength, momentum, and tailwind. So if you look at just the hyperscale business, that's all new TAM. It's multi-year, multi-billion-dollar opportunity, growing really strong, obviously, for us. But then even in the core networking business, you look at data center. People said that people
Airbnb.
Data centers. If you look at data center networking, it was actually up over 35% in Q4. It was up over 40%.
Very strong open on Airbnb.
We've got this campus refresh going, another multi-year, multi-billion-dollar opportunity for us. So we feel really good about the networking super cycle that's well underway, but we're very early on, and this is going to run for multiple years.
So you see a scenario where Cisco, if we're having this conversation a year from now, you're still growing at double-digit rates at key parts of your business.
Yeah, I definitely think that's an opportunity for us. I think that if you look at kind of what's driving the growth, and talked a little bit about this, but if you look at what's kind of driving the growth across each one of these key markets for us, I would say those underlying trends in the tailwinds that we're seeing are actually stronger and more pronounced than they were just a few quarters ago. So I think there's opportunity.
Airbnb.
We gave a guide that we believe is prudent for the year. Still really strong double-digit growth on the top and bottom line and operating as well.
The security and collaboration business, I think, surprised some on the street in terms of how strong it was, double-digit growth. Is that a function of companies now coming to Cisco and saying, hey, I see what Anthropic is doing, I see what OpenAI is doing. I'm concerned about security at my company. I'm concerned about the security of my company as I release AI agents throughout parts of the organization.
Yeah, I think so. We had a really strong growth in performance in security and collaboration in Q4. If you look at security,
SpaceX looking for more upside.
Basically, what we said is
okay. That looks good. Tesla.
Security. So
Tesla at the end of the day, we've got 2 hours, 1 hour, 8 minutes to go. Sorry. Tesla looking good. Tesla at the highs. Okay, looking for a follow through. Almost a bullish engulfing candle on a daily. Didn't get down below yesterday's low, but we're at the highs, pushing through levels here. The 21, we're above the 21-day to 50-day is overhead.
So this whole sort of call this mythos effect, if you will, and this concern around vulnerabilities and the need to modernize the infrastructure. I think that's also going to be a tailwind for us for many quarters, if not years to come. But we're really, right now, it's top of mind for every customer. I would say that we're having the discussions about the need to modernize
21-day, 50-day, 200-day overhead. Tesla looking good. We're at the highs. We should see some profit taking probably in the next half an hour or so. See if it holds up here.
So I'm encouraged that I think that also will be a tailwind for us as we move forward.
Cisco, and I don't have to tell you this, I'm sure you're aware, has been built on acquisitions over decades. Someone as the CFO of the company, what do you make of the valuation layer?
NVIDIA came off the lows, sitting on top of VWAP at new highs for the week.
Done is really instill this
we got earnings,
this notion that we can
2 weeks,
and we can drive innovation. Internal
August the 26th.
26 years. For so many years, Cisco sort of bought other companies, bought adjacencies, and tried to catch up in markets. And I think that you're really seeing this push for internal innovation. At the same time, we obviously look opportunistically at acquisitions. Some of the key areas for us in terms of priorities are obviously around silicon, optics, AI, cybersecurity as well. And this, Chuck talked a little bit about this in the call too. This position that we're in relative to the networking super cycle, this didn't just happen to us. It wasn't sort of something that fell on our laps. This has been in motion for quite a while. You look at some of the strategic investments that we've made, as well as acquisitions in silicon, and optics, and cybersecurity. Those have really helped put us on the map here and actually put us in a really good position to capture this opportunity.
Good outlook and good quarter. Mark, good to see you. Don't know what the street is thinking, but we'll talk to you soon.
Thanks, Brian. Appreciate it.
All right, the Not In My Backyard anti-AI data center crew has at least one prominent supporter in Robinhood co-founder and CEO and space racer, I should say, Beiju Bhatt. Bhatt has an invested interest in putting data centers in space, an upstart rocket from Cowboy Space Corporation.
Okay, Airbnb still pushing a bit more. Market's making some progress. SK Hynix at the highs. S&P pulled back and just sitting here. S&P looks like it might back off here.
Institutional investors, retail investors, and just the collective consciousness in the world there is commercial opportunity at scale in the space industry, I think is huge.
Good to see Beju. What are you doing up there in Seattle? You can watch this episode of Power Players on Yahoo Finance.
Cerebrus just sitting here at the low.
So be sure to leave me a review and like and subscribe.
Cerebrus knocking the stuffing out of a lot of traders. We kept the calls. I thought we'd get something. Nothing. Didn't happen. We got a 21-day cross above the 50-day now.
People always ask if I cook the same way at home as I do at my restaurants. The answer, yes. I'm Michelin-starred chef Nancy Silverton.
21-day, 50-day cross, but we did gap down. Disappointed. Definitely disappointing. Took the CBRX shares off yesterday. Thank goodness for that. All right, so we're out of that. EPS is done. What did the earnings look like anyway? Okay, they beat. They surprised, I should say. Reported a loss of 4 cents. Estimate was for a loss of 17 cents. 19 million in revenue increase. All right, there's no reason why this can't rally. I got January calls. Okay, Cerebrus, SpaceX just grinding along. I don't think anybody's paying attention to it. They're not talking about it much on financial media. Inside bar, looking for a break above yesterday's high. SpaceX. Netflix bouncing, turning back up. Netflix. Google's got a lot of work to do. Google looking for that to get back to the 50-day over the next few weeks. Google. Once it gets back above the 50-day, then we'll be looking at it again. Broadcom, no follow through. Had 4 days of distribution, or 3 days anyway. Let's see what Broadcom looks like. Broadcom. All right, it's holding up. If you got a profit, maybe you take that off if you're trading options. Just an FYI. I might do that as well. It gapped above the 50-day. We're looking for more upside. You can see the 50-day is still pointing down, so that's not good. We want that to turn up. 21-day crossing up through the 50-day. So Broadcom, I might take that off. Got a small profit there. If it takes out this week's high from Monday, I'll probably get back in. But for now, I'm just going to hold on. Let's see what's going on here with Broadcom. Looking for a break to the upside. Micron. Okay, that looks pretty good. Got semiconductors, exposure, SOXL. So we're looking for that to continue with a lot of these memory and semiconductor stocks. Looking more bullish.
Into the US trading day, so let's take a look at major actions. We are seeing new records right now. The Dow almost 40 points or so, 1%. It's the S&P that has made a new intraday high. It's up about 0.6% today, and the Nasdaq is up about 0.8%. Going back to the S&P 500 here, I want to take a look at the year to date for that index and what we have seen here. So here you have the new record high for that index with this latest push upward after kind of some sideways movement there with a lot of volatility in between during earnings season, as we've seen a lot of individual stocks been pushed around. But overall, as we know, earnings growth has come in steadily better than expected. And not just that, but by a wider margin than is typical. So we see the earnings power continue to push up higher here with that year-to-date performance, and then a record for the S&P. Now, getting to the sectors that are moving today, and I also want to look at year-to-date. Today, we've got communication services, real estate, consumer staples, and tech that are all pushing the index higher. So mixed group in terms of traditionally defensive mixed with traditionally offensive names. And then again, if we take a look at the year-to-date push that we have seen within the S&P 500, perhaps surprisingly, energy is still in the best spot here because of the push in oil, underlying oil prices earlier in the year. But tech, of course, is number two. Industrials, materials. Those are the four.
Palantir at the high of the day.
The S&P that's this year and have accounted for a decent amount of the gain. If you look at the 1 month as well, since we saw
Palantir.
in the index, a lot.
So XL pulling back. Palantir hanging out at the highs, looking for a break to the upside. Tesla, similar, maybe tomorrow. SpaceX moving above VWAP.
In green today, SpaceX would be the one exception there, as well as Cisco. But otherwise, we're seeing a pretty good rally here across the sort of AI and tech spectrum, if you will. When you look at semiconductors as well, we are seeing some gains here in today's sessions. In some of these cases, a bounce back in some of these stocks. And then we also have sort of some.
All right, Apple turning back down. Microsoft, not much progress on Microsoft.
But if you look at
Consolidating recent gains. Microsoft.
Semiconductors.
Okay, SpaceX catching a bid here.
Is down as well.
Buyers at the low of the day. SpaceX catching a bid.
Plus smaller holdings in Neocloud, Nebius, and that optical firm Coherent I mentioned. The chip giants also has private investments in OpenAI and Anthropic, and just this week announced new partnerships to help smaller firms access capital to buy its chips. Joining us to talk about the NVIDIA portfolio, if you will, is Ivana Galevska, Spear Invest founder and CIO. Ivana, it's good to see you as always. So a lot of the talk around NVIDIA has been around circular financing. I think it's also interesting to talk about it in the context of what the portfolio is. It is pretty unusual for a large publicly traded company to invest in other publicly traded companies, including some of those that are its clients. Should people be following the NVIDIA portfolio and investing in it for themselves?
Well, absolutely, Julie. I think what's happening here is NVIDIA is trying to support the ecosystem, and they're investing in two ways. They're first trying to support their suppliers. So anywhere where they see any sort of...
All right, S&P is starting to move here.
They think that this could be something that...
S&P turning back up.
They're investing there. So from that perspective, those usually end up being very good opportunities. And then on the other side, they're trying
Okay, that looks good. Q's driving for highs. Q's, IWM looking for more. S&P breaking higher.
I think that selling there is a little stronger on the supplier side rather than the customer side.
And you know, incidentally,
Okay, S&P is bid here. It's starting to rise. Okay, let's look at Trace. Hedge flow line still rising. We got this level here. It wasn't there before. 77.95. That's new. Let's go back and see how far back we have to go. All right, so it wasn't there during the. Okay, it came in at the noon hour. No, it came in at the last 30 minutes or so. This new. Okay, coming up against that level.
As you see, the suppliers are really totally in the suppliers. Talk to me about that thesis, which is, you know, the sort of like picks and shovels have been popular for a while now. Where are we right now in that cycle?
Well, Julie, what's been happening with the picks and shovels is the bottlenecks are shifting from some place to others.
New.
So it used to be going into this year, memory was a big bottleneck. going into next year, we think optics is going to have the same sort of dynamics. It's equally cyclical to memory, and there's not enough supply. So companies are going to have to rush to add supply, but they're not going to be able to add it just in time. So this is why optics is one of the trades we really like. So capital equipment is another.
Tesla looks like it wants to go.
City needs to get added. You're going to see the semi-cap equipment names benefits, like companies like Lam Research, KLA, those supply the equipment. So that's another area that this cycle is just.
All right, SpaceX just pulled back in a little bit. S&P did the same, little bump higher and comes back in a little bit. Very choppy, hard to trade this. Hard to trade. All right, looks like SK Hynix is done for today. SK looks done.
Absolutely. So for optics specifically, most companies are planning to double their capacity this year and then double it again next year. But what we're seeing from demand, it could actually be 7 to 10 times.
SK Hynix, profit taking, maybe not a bad idea.
Cables. On top of that,
Okay.
the data center side, which has already been playing out, but now optical components will find their way into the servers themselves for scale-up applications, and it's an entirely new market that didn't really exist before. So this is why the demand is growing 7x while the supply is struggling to.
Palantir trying to break out. Palantir, very strong Palantir. Okay, trying to break higher. Palantir.
Obviously, you're well aware of the sort of questions or concerns about this whole cycle. There was an interesting piece this morning by a macro strategist Simon White, who said he pointed specifically to the new NVIDIA financing structure, which is partnering with a bunch of Wall Street giants to potentially put $500 billion out there in the system to try and finance more of this compute. As he said in his piece, he was drawing parallels between this and
Palantir trying to push.
financing schemes in particular. And he says, in the
All right, here we go. Palantir trying to push higher.
demand, muting the signal from the underlying market that they're
Tesla as well.
nationwide for the first time since the 1930s, an event not factored into any.
Watch Tesla. Tesla trying to go.
Do you have any concerns?
Okay, Tesla trying to break through this level. All right, not bad.
Change in demand from the end user that it will be.
Okay, so we're taking out the highs over here.
When we have all the supply coming in, these industries are cyclical. So this is why tracking the demand side is so important. So we talk to companies either on the private side.
Okay, we got this gap here too. Gap just overhead.
So way to track the spot price. Right now, what we're seeing is actually the opposite trend. So people are not necessarily chasing with housing. The difference is that people are buying those as an investment.
Okay, see if we can't get Tesla to follow through. It's been bullish for the most part for the last couple of weeks. Meta, Google, turning up. Google's got a lot of work to do. Netflix turning back up. Airbnb turning back up. SpaceX taking a little break. It did come off the low, so SpaceX probably a little profit taking. Day traders, shorts covering initially. Day traders riding this back up. Let's see if it goes through this level or not. Inside day. Any news on SpaceX? Cowboy, space founder, Baiju Bot. Building AI data centers in space. We want to forge our own path. S&P 500 CEO pay jumps to record as Musk-inspired compensation plans spread. Okay, I really don't care. If they drive profits, I don't care if somebody gets paid for that. Why wouldn't you? They have an incentive to make the price action and the company more valuable. So yeah, I'd be going for that. All right, Tesla moving higher. Tesla.
These areas are, in general, pretty well understood, right? So are there anything in the bottom?
Tesla trying hard.
Well, I think the optical components is relatively newer and semiconductor equipment is relatively newer. CPUs as well, I think, are not as well understood. That cycle just.
All right, so to chase or not to chase?
As you see, the agentic AI
Tesla.
the AI agents will require a lot more CPUs per GPU versus the data centers themselves. So, or model training. So I think what we're going to see.
Okay, go Tesla, go.
In CPU. So I would say from the data center trade, definitely.
All right, goes S&P starting to bounce.
Says to be. And then broadly speaking, we are very excited about the space team. I think that's going to open a lot more opportunities and more markets, whether it's defense, whether it's communications, or data centers in space themselves. I think that's another interesting area.
And we also, by the way, just showed you data from Yahoo Finance's Alpha Space platform. That's a new professional grade financial platform featuring advanced charts, real-time moves, customizable investment research, and more. You can access all of those tools by using the QR code on your screen. Coming up, we'll look at the latest producer price data and what this means for the market and the Fed. That's next.
Running your first 5K.
All right, it goes Tesla starting to push.
Choosing a name for your first. Not easy. Progressive understands first times can be challenging. It's why we created the Up Payment Program, down payment assistance for first-time homebuyers. Because first times are easier with a little help. Learn more at progressive.com/open the house.
Preparados, listos, verano. Con el verano de puertas Honda, haz que cada milla sea especial en Accord o Accord Hybrid, con motor turbo alimentado estándar. Otro motriz híbrido disponible. De Honda, la marca automotriz de línea, está con el más bajo consumo de combustible de los Estados Unidos. Ahora puedes obtener un arrendamiento de 229 al mes o un PR de 4.40% en una Accord 2026.
Your body was designed to move, to bend, to live, to adapt. I never expected to be a single mom, but when life shifts, your body is what holds you steady. It's why I fuel mine, Mind Body Green's creatine with taurine blood. Creatine builds lean muscle to keep you strong, while taurine keeps my sharp. I can touch every beautiful strength isn't always that. It's always ready. Fuel your body with Mind Body Green's creatine with taurine plus. Feel how strong.
People always ask if I cook this.
All right, looks good. Tesla.
Michelin starred chef Nancy Silverton to make truly delicious food with Hex Cloud's hybrid.
Okay, we got that gap overhead on Tesla. If we could get into that zone, we should see a lot more volume come in. Okay, Google looks good, but it's got a lot of work to do. I've been saying that over and over. Maybe the powers that be hear me. Airbnb watching for that to follow through. SpaceX, Palantir rejected at the highs. Palantir.
Giving you control over light and privacy. Choose from beautiful fabrics, multiple lift options, and custom sizes made just for your windows. Upgrade your windows with Blindster Roman shades today.
When you think global pop sensations, our person doesn't have to think about it. But we thought,
You did what?
and found out she's pretty.
Thanks.
So here's Sarah's one seating guide for the month.
There's a guy.
At the top,
Wet it out.
and when it's full,
What's different?
fun.
Well, I find my clothes secondhand on Depop for cheaper than retail.
No.
Yeah.
The banks look good. Most of the banks are coming out of squeezes. JP Morgan trending, along with Bank of America trending.
Unchanged month over month, that comes slightly lower than economists' expectations across most measures. Investors are also digesting the cooling consumer price data we got yesterday, also the expected jobs report. All of that could boost the case for the Fed to keep rates on next month. Actually, that's what's being priced in. Let's see.
SK Hynix holding on to the highs. We did have some profit taking, but it's maintaining its highs. Okay, Tesla. Tesla looks good. Volume coming in end of day, Tesla.
That there's a higher chance that it will hold after these 2 days.
Yeah, that sounds very tough. We've been in the hold. It is sometimes silly. I think we should, we're asked for calendar based. Yes. Whether they hike or not on time by September, November, December. But we provide that guidance nonetheless, and we don't expect a hike this year. But it's a low conviction call, and we acknowledge that the likelihood that it's clearly increased, just given what we've seen following, all the Middle East news, the volatility of oil prices, inflation. But we've gotten some good news. Yeah. So whether it was last week's jobs report, certainly a sigh of relief. Arguably, actually not good. We want cool readings. We don't want negative readings. Yeah. But if you're looking for the labor market to tilt them in that direction, we didn't get that last week. CPI print right on the screws. That's what we're looking for. Today's maybe wasn't as good, the PPI print as CPI, but if there's a Fed official who's holding, and we know there's 9 of them voting that are, and if they're looking for the reason to hike, understanding that inflation's just been too high for 5 years and counting now, they haven't gotten the reason.
Right. And we have another print before we get the next Fed decision. So that's important. That's awesome. Where do you see the sort of persistent inflation pressures at this point? I was looking at the year-over-year fuel prices, for example, month-over-month.
What's AMD doing? I haven't looked at AMD in a couple of days. That's still oscillating around VWAP. Needs to get back above the 50-day. They got good earnings growth. Supermicro, that was on in the news yesterday. Supermicro breaking out to the upside. No position, and I don't think I have a position in Supermicro, do I? No, I'm pretty sure I closed this a long time ago. I think I took a profit right near the 50-day a few weeks back, Supermicro. No, I don't have any Supermicro, so I sold it. Okay, cool. The banks look good. SoFi, the ancillary services, looking for SoFi to break out. This has been forever. What is this, about 10 weeks now? Been sitting on SoFi. Cerebras, looks like it might do something end of day. Cerebras.
On that front, it's interesting that stocks.
Okay, looking at the S&P 500 at the New York Stock Exchange, junk bonds towards the end of the day. All of these are rising. S&P breaking the new highs today. So it looks good for tomorrow. Positive gamma. Okay, so we're testing the highs. RSI still rising. MACD, stochastics. Volume looks good. Momentum looks bullish. New York Fangs look good, right? New York Fang. Okay, this could look worse. This could have faded back down towards the 21-day or the 50-day. Didn't happen. RSI is still above 50, pointing up. Bullish momentum. Stochastics turning back up. That looks pretty good. XII, the ARC Institutional Index, that's also trading at highs. New all-time highs, I should say. So that's good. Advanced decline percent, all turning up, even NASDAQ.
Under the surface, though, we do see risks that they could rise further independent.
Looking for a signal, a Zweig breath thrust signal. Haven't had one since last year.
One supply shock is one thing, but I feel like we keep getting more and more supply shocks. Does that factor
Okay,
in?
still looks good. Looking for 8,000. Many of the big names like Dan Ives and what's his name? A lot of people looking for 8,200, 8,000, 8,200. Tom Lee. So looking for more upside. New York Stock Exchange, NYSE, trending. The Qs, seeing a lot of big trades on the Qs out in October and November. Looking for more upside. Some pretty big trades. Tens of millions of dollars in trades. Okay, SpaceX turning back up. SpaceX. We got buyers at the low of the day. Since a week ago, we bottomed on Thursday. Friday, we followed through into Monday. Note the wick on the bottom of Monday's candle. Tuesday's candle. Wednesday was all bullish. Wick underneath today's candle. That's showing buyers are still interested from about 115 all the way up to 145. 30 points and they're still buying. That's good. I wish Cerebras would do something. Cerebras. All right, S&P, no follow through. SPY. SPY's just sitting here. SpaceX. Okay, Supermicro, SpaceX. All right, trying to get above and stay above VWAP. SpaceX off a few percent on the day. SpaceX.
Cleveland telling us, well, I think we should hike right now, maybe multiple times because of XYZ. We're getting what we've always gotten, just not from the chair. So long-winded answer, but not much has changed in terms of how we're viewing potential monetary policy.
What do you want to get from the chair in Jackson Hole?
Well, we got that article last week about.
Right. I'm not going to talk directly to you. I'm just going to lead through other.
Yeah. So I want to say clarity, but I don't know if we'll get clarity. Maybe we'll get some.
So CPI was good, benign. PPI.
What is the official format for how we launch it? Not launch task force, but provide
Pretty much what was expected. PPI.
Progress report on how they're working. Maybe.
Okay. Construction looked good. Core PPI. Final demand for goods that dropped a little bit, thanks to a decline in energy prices. And a plunge in gasoline. Headline PPI unchanged on a seasonally adjusted basis. So this earnings have been good. So, I mean, aside from the last couple of days, earnings have been received fairly well, fairly bullish activity. Cerebras, not so much last night. But the markets are holding up. We made a new all-time high today. Banks look good for the most part. Banks look good. JP Morgan. Okay, materials going into the close. Materials pulling back. Communications bouncing. Energy has been leading. Industrials bullish. XLF bullish. XLP bullish. XLK, tech, bullish, semiconductors, bullish at the 50-day. Healthcare, taking a break, but a bullish trend nonetheless, especially if you look at the weekly. Utilities, bounce, double bottom. Consumer discretionary, looks okay. Retail, bounce at the 50-day. Software services and software in general, IGV higher. Make sure you're paying attention to the Palo Altos, the security services, Palo Alto, Zscaler, Datadog, CrowdStrike, all of those doing well. Okay, so you can see the difference compared to yesterday. This looks a hell of a lot better. You've got value and growth, large, mid, and small caps all performing. Okay. Communication services leading the most today, 1.33%. Meta pushing a bit higher. Tesla's still pushing here. Tesla. Okay. Let's keep an eye on Tesla into the close. Tesla still managing a higher high. Okay, we took out Tuesday's high. We're going for this high over here now. Tesla, we're going for this high right here. Okay, the 21-day is right there. Looking for that to turn back up. Price is above it. That's bullish, short term. Fair value, short term. 21-day fair value, short term is looking good, looking bullish. I wish we could get the New York Fangs to all agree. Microsoft and Apple dragging their feet along with Amazon. Jeff Bezos selling Amazon shares, so no surprise there. Okay, Tesla pushing a bit higher now.
So the main thing for driving the increases where we are seeing those increases.
So we see increases over 32 states in the United States, and increases are driven really on state by state level. A lot of the pressure that carriers see in order to file rate increases that we see the most dramatic increases from Connecticut being the top with over 15% increase over year are states where the general insurance has been relatively low. States like Connecticut, West Virginia, and Illinois. But we also see some states where the insurance rates are decreasing on average 2 to 1%. So
Tesla looks nice, bullish.
States saw 40-50% increases up to COVID of our insurance rates. But it's good to
What's
see
AT&T and Visa doing? Verizon doing? Those are trying to push through the 200-day. AT&T, Verizon, T-Mobile, telecommunication services, communication services.
So unfortunately, our
T.
expensive categories in some cases for a family with low budget, it would be a 4 to 5 months of groceries.
When you talk about the repair costs having gone up, is it, you know, you mentioned tariffs, which obviously are pressure on some of those parts that into the cars.
Okay, S&P popping here. 230, bottom of the hour. Bottom of the hour trade there. Corey. Bottom of the hour, S&P on the move. Maybe it gets going here.
Unfortunately, the severity of accidents will continue to be very. We saw a spike of the severity right after COVID, and everybody thought that this is just a post-COVID trend. And unfortunately, the severity of accidents have continued to stay stable. The way carriers across the board are adjusting for those increases of claims is that they're finding rate increases on state by state level. And unfortunately, those rate increases will be very substantial or relatively small, and they're very much dependent on how carriers are trending from a loss ratio perspective. Unfortunately, across the board, as I mentioned, 32 states are seeing rate increases this year, anywhere from 4 to 5 to 15%.
One other thing that caught my eye in the report had to do with politics, which I was a little bit surprised about. One affirmative driver said auto insurance costs will play a role in deciding. To be perfectly honest, I was very confused by this. Do elections have anything to do with auto insurance rates?
Yes, so both auto and home insurance rates, and what we have noticed is that sometimes people are on a rush to do insurance for home insurance. For example, if you are deciding on a major home with a mortgage, often people don't even understand that their rates might be increasing 20, 30, 40% year over year in some states, depending on their location. And the same applies for for home insurance. Often consumers do not understand the burdens that they're taking based on their location, based on the zip code that they live in, with car insurance as well. So yes.
Regulated on a state by state basis, do they set the rates?
So car insurance is regulated on a state by state level, and what we do see is that that users can save over
All right, S&P looking for a little runner here.
and what is driving the differences of regular
Okay, Airbnb popping up, Palantir popping.
pricing this differently. So the same exact consumer with exactly the same risk can be priced very differently. And sometimes people think that just because they're staying on the same insurance for 10 plus years, they're getting loyalty discounts. But the reality is that they might be saving $1,000 if they just shop. So sites like InsureFi provide that. Apple's experience.
Eugenia, thank you very much. Appreciate it.
Thank you. My pleasure.
So today's trending table.
Airbnb looking good.
The purpose of engineering is on performance. This is a excellent with hybrid technology. Company balances durability, searing power, and non-stick cooking performance. Its purpose is to help anyone driver, even similar, pursue his dream. A mistake for me, right here. Thanks for letting me buy it, Pam. Thanks for letting me borrow your car. Wait. Wait, what?
Just a total virus here. Because if anyone needs a minute, it takes me one minute. Total text. Especially just today. They might be for another. They're pretty 5G and it makes
S&P starting to move between these two levels. 77.95, 78.10. Apple no follow through, Airbnb, Nvidia. Or looks like S&P wants to go here. Airbnb going. All right, Palantir looking good.
It's not a Monticello beer, but close enough.
Yes, the best way to think about us is on the one hand, we take the best elements of meal kits, and on the other hand, the best elements of fully prepared food. So you get our countertop oven, we send you food that is ready to cook, but the ingredients are mostly raw. But instead of asking you to chop and prep and do all the cooking and cleaning, we ask you to spend 1 minute preparing with, add some spices, maybe add a little more. Then you scan a QR code on the oven. The oven downloads the cooking instructions from the cloud. So it cooks it exactly the way our chefs intend, using dry heat, wet heat, oil, different temperatures. Then you get a push notification 20 minutes later, and you get an absolutely perfectly uncooked meal for 100 people.
Bottom of the hour.
So think of it as like
algos.
When somebody buys into a today, David, how much are they eating Tobala meals versus grocery food? Is it 50-50 split?
People order about 6 meals per week on average, but they use the oven for their own food also. So you can use it as an air fryer, as a toaster oven, to make cookies, to make coffee, you can do a whole bunch of different things. So on average, people are using their ovens.
All right, Lee Star helping us out. Palantir looks good. Palantir. What's Tesla doing? Tesla at the highs here. Palantir looking good. Nice little pop. Palantir breaking out. Palantir. Okay, Palantir.
So most of the meal kits, the last decade or so, struggled really hard. People would try it for a week, they bargain on and discount shop and switch to some of the other ones that rarely do they stick around. It's very different as well. Once someone buys the oven, puts it on the countertop, we own that real estate. People stick around for a long time. That's how we've been able to get the profitability. We've been profitable now for almost 3 years and hit the revenue numbers that we have.
Who's your typical customer, David? Like, I'm curious, is it singles, is it couples, families, and how overall is it? Have you seen it evolve?
Yeah, it definitely, we appeal to a really wide spectrum of people. So the kind of target customer is a young, busy professional that lives in cities and wants to eat really great food, but is maybe tired of doing DoorDash every night. It's going to the meal kits. We also serve them as they age up, so as they have kids, as they become empty nesters. We're a great solution for them to multiple different life stages for different reasons. The biggest change in our customer base probably has been more recent.
Okay, nice little pop there. Microsoft too. Wow, nice little pop. Palantir.
For the first 6-7 years of our company history.
I love the business model, David. How much of the and I assume it's a subscription model.
Yes, we have 2 different ovens. One retails for $69, the other is $119.
S&P going. S&P is going.
Service 6 times. And that allows you to get this really expensive oven, really great oven for a much lower price. And then the meals base price is $13.99, but it go as low as $8.99, $7.99 family meal. If you get a meal, it's $11.99, that might get you.
Palantir looking good here. Palantir.
Yeah, super strong. Retention looks better than it has a very, very long time. So we haven't seen a slowdown in.
Okay, there goes Meta. Meta popping.
Demand from new customers. We did raise prices price about a month ago on the deal, so it's the first time we raised price in many years. And really, it to our customer base. So what we're seeing as a resilient customer, I think certainly part of that is that reels are well priced as compared to many of the alternative convenient options, but nevertheless, the consumer seems pretty strong in ours.
I have a question, Dave. We talk a lot about AI on the show. And I'm curious, how do you see AI over time impacting your business, your fund?
Yeah, I think the biggest thing for us is moving towards personalization. So we'd love to get to a point where you come to the Vault website, we learn a little bit about you, and we can give you a meal that's really perfect for you, or even meals that are perfect for everyone in your household. And to do that requires a whole bunch of infrastructure behind the scenes, of which AI will certainly power a lot of that, especially as it pertains to what are the right selections for each individual.
David, great to have you on the show today. Thanks for your time.
Thank you so much.
So today's trending tickers are watching Intuitive Machines, JD.com, Dell, and HP. Let's talk about Intuitive Machines. Those shares are down about 2%, actually trimming their earlier decline considerably. The space company out with numbers that missed estimates, at least when you look at the second quarter. Revenue was about
Netflix turning up. Okay, looks good. All right, so everything's getting a little reprieve here, giving us more. You got an hour and 15 minutes, Mondo. NVIDIA. NVIDIA's still not moving here. Trying to go. Netflix.
JD.com today, the company having its first revenue decline as a public company. About 12 years ago, the shares are down.
Palantir looking really good here. Palantir.
Although it's a small drop in some analysts have anticipated, there's a couple things going on here. A lot of in China, particularly on some of the food delivery. There is sort of a price war that's going back. There are a lot of promotions being offered in that market. And so all of that weighing on these numbers. And then finally, we're watching Dell and HP go up. It's because of Lenovo. You see there in the US listed shares of Lenovo, huge volume, but enough to see a 19% boost in the shares. Dell and HP riding on its coattails. Lenovo says that revenue is going to be $100 billion this fiscal year. It has to do with AI, of course.
Palantir. Looks good. Just now breaking out, actually. Okay. I had a limit order to sell. I'm gonna cancel that. Let Palantir go some more. All right. Cancel.
making the money, but it's not.
Palantir continues, looking good. Airbnb higher.
That's exactly right. You control all the money in the world. It'll be kind of off. But it just can't physically happen.
SK Hynix looks like it wants to break out. SK Hynix. Micron.
Significant orders.
Okay. SOXL.
And so what's happened in our
All right.
very strong
Palantir does look good though. Palantir.
in the history of the world that are racing to compete. And so when one orders a lot of memory, the other sees that's environment behind it, and so they're ordering too, and so are the others, and so are the others, and so several people have written about this as well.
Netflix is going. David.
And that gets amplified throughout the supply chain to make sure they go first and then you have your place in line. Our concern is that when the friction really hits, whether it's
Netflix is going. All right, nice little move on Netflix.
then there's going to be a significant
Breakout.
that also works in the other direction.
Looking good, Netflix.
These are the economic implications that may affect all of them.
Netflix opening range breakout.
What's really interesting is that yes, the money is significant. We don't cover some hyperscaler stocks, but I think we all know that their cash flow has gone negative. So they're finding other, in our opinion, pretty interesting exotic ways to raise that capital. It's equity issuances or these deals that some compute hardware companies are putting together. They're doing backflips to get the money to make this all happen, but that might not be the answer to solving all.
And we were just showing a chart of Bloomberg New Energy Finance, their forecast that we were talking about the pace at which we've been building out gigawatts per year. They say we need to reach 94 gigawatts for data center power specifically by 2035. It sounds like
Netflix going.
so. When you talk about the bullwhip, right, and that sort of snapback, we built out, all this stuff to go into these projects that are maybe not happening. Who has the most to lose then when that snaps back?
Well, look, we don't cover a lot of these companies, but I will say, and we just sort of do the quick math and look what's been happening in the market. There are some sectors of the tech market that have been very explosive because all of the current demand signals are very, very, very strong. And that's in our opinion because of you're buying this thing first before you power it. And
Okay, high of the day is right here.
Look at it. It's all seeking suspicion of a lot of this stuff. It's clearly does. You can't power it though. What? It's been used in anticipation of the and there have been, and we've written about this too. So these are all the supply. What happened in the second quarter of this year is that there was this change in the business model from some of the very large AI labs. They went from pricing at a flat rate, pricing per token.
Meta's going, looking good here. Meta as well. Everything's starting to turn up now. Meta breaking out of the opening range. Okay, is the Meta gonna go? Looks good. Meta, all right?
For example, a couple of months ago, Uber's COO said, wait a second, we moved to this 4-token building, and suddenly our costs have blown through the roof, and we can't really justify all the spend. So we've been concerned about supply. We cover the power companies, but there also appear to be some cracks from a demand perspective. We'll see it. There's been a lot of installs also with the Chinese model in market share. And these two big AI labs, they're supporting almost the entire build-up, whether you're another company that's building a data center or hyperscaler that's building a data center, a lot of that demand is coming from those two companies. So if anything happens there, demand slows down there, that's a big deal. And so this, in our opinion, it's a very unhealthy cocktail of things that are happening all at the same time.
All of that said, George, the companies you do cover, which are the power companies, you cover the nuclear sort of startup companies, most of which are not, I don't think any of which is actually producing energy yet. And you cover, like fuel cell companies. You can buys on all of those. So you still think those companies will benefit as this all unfolds?
Yes, and so our ultimate underlying bull thesis is that look, there may be ups and downs in terms of the headlines, but ultimately we need a lot more power. We're talking about pace. Ultimately, we will build many of these data centers. Not all, percentage is still up in the air, but we still need to add power to the grid. You still need to basically meet this accelerating demand in electricity in the United States. We're growing at 0.5% for decades. That seems to have picked up pace. And so whether it's some of the nuclear companies eventually or some of the other power-related companies, they still will see healthy demand. And what the data center companies have done as well, which is super interesting, in our opinion, they were trying to tie to the grid to get power. That was really, really, really hard. You get their interconnection queues and permits and all this stuff. And by the way, that's impacted all of our power prices. And so what they've decided to do over the last 6 to 12 months is build something called behind the meter. What that means is we're going to bring our own, we're going to build essentially our own power plants to support these data centers. And that's creating this other leg of demand as well for some of the companies that we cover. And that may be the ultimate solution to all of this. That's going to take a lot of time.
Yeah, it is going to take a lot of time. See what the stocks do in the meantime, not just for the power company, but for the whole ecosystem. George, love talking to you. Love the conversation. I'm sure people will get some. Thank you. That is it for Market Catalyst. I'm Julie Hyman. Thanks for watching. More young.
Talk about food grilled and melting pepper steak food. Luxury, premium grilled steak with new pepper sauce and a melty steak burrito. Now joining the Lux Value menu with 10 items, each just $3 a month. Only at Top. 4 days of incredible RV savings. The Bulgarian RV show is in Myrtle Beach Mall, August 13th through the 16th. This price to sell before we tear down Sunday night. Design, drinking, adventure, and America's top travel models. Shop exclusive show offers you can see again this year. Get top dollar for your trade with financing specials that fit your budget. When the show's over, the deals are over. Join us on August 13th through the 16th at the Great American RV Show next to Bass Pro Shops in North Myrtle Beach.
They say there are just like stick on the genius is your these two
Juice. Back. No. The extract cocktail shake. Stale gin. Ready? Please. Six oh seven.
Hello and welcome to Body Domination. I'm Josh. LinkedIn Live. One of the headquarters is just about proposing about inflation rate increase September rate hike next year. Jared would be
Yeah, so we got a rally underway. Although on the Dow, we're just barely trucking water. 15 points. very choppy action, but check out the NASDAQ. That's up almost 1%. Hit the highs earlier in the session here. S&P 500, pretty similar chart, but a little bit less than NASDAQ. And let's take a look at the Russell 2000. It's up 0.2%. I should say too, S&P 500 hit a record intraday high earlier, as did its equal-weighted cousin, where the stock gets one vote, and that index is up about the same as the S&P 500. I also want to point out that the mid-cap sector, S&P 400, that is also a record high, up about 0.5% today. So we do have another August risk rally in tow here. I'm going to get into some details on that in a minute on how August is shaping up a lot differently than July. But first, here's the 10-year Chino deal. It's moving down. It's the right direction for stocks, down 5 basis points to 4.64%. 30-year T-bond yield, that's down 4 basis points to 5.21%. We did get that inflation data today, so that was probably a factor there. And U.S. dollar index, what we call that trading water. So let's take a look at the large cap sector spectrum here. We have communication services. That's where you're going to find Meta and Alphabet. That's at the most, 1.66%. Then you got tech, then real estate, then consumer staples. All of those are your outperformers. The S&P 500, and outside we got materials, energy, check out the NASDAQ 100. We do have Tesla up 3.64%. Broadcom up 1%. Let me just show you the rally that we have going in semiconductors. Intel is up 4%, so is Lam Research, and on SanDisk up 15% there. You can see the 1500, back over 1500 there. And if you're wondering about software, guess what? That is a green look too. Cisco, after earnings, down about 9%, some concerns about AI there. But for the most part, we are seeing tech hitting on all cylinders. And let's check out what's going on with that. Remember, it's kind of trading water today, so not surprisingly, you're seeing a mix of red and green. Cisco's in there, as I mentioned, down 9%. Works up 1%, Verizon up 2%, Disney up 1%, Nike up almost 2%. Trading to the downside of that, down about 1.61%.
And Jerry, I know you got your eyes on kind of this year parts of the market as well. What are you seeing there?
Yeah, I brought a chart here. I'm writing this up for Chart of the Day Friday, and I took a look at the first 9 trading days of every month going back to 2015. So that's about 10 years. And what's really interesting, I took a basket, an equal basket, Arc Innovation Fund, the IPO ETF, the stocks ETF, that's chip stocks and software. So you take those 4 markets and you look at their first 9-day performance, we are up almost 7 percentage points. That is the most in this entire 10-year bucket. Now we have some other close seconds. That is May of 2020.
Meta continuation. Looks good. Meta.
2021. Well, that was a great time to buy.
All right, a lot of nice follow through here. Opportunity to take some profits off the table.
Extended in those markets, to see. But I wanted to show you what's going on with some of the sector actions. So over 9 days, the 9 trading days, tech is the only outperformer from the S&P 500. We've got almost everything except utilities, real estate, also just trading water and steel. So very positive. Very defensive sector.
Meta looking good.
Looks like these are my leaders in ETFs. So in the upper left, that's the Arc Innovation Fund. It was up 16%. Then we got Korea, that's at 14%. That's your chip trade. Quantum has made a comeback. Software with IGB. And IPO, that's those. Stocks is chip stocks. And the list goes on. Even biotech up 7% there. It's not working in August is China. Q1 is down about 9%. XRT is your retail trade. And then more volatility. The boring stuff is not doing that well. But I want to show you my main basket. I don't look at this all the time. This is a holdover from 2021. I just want you to see all the green. On the top row, we have Carvana up 20%, all the way up to ONTX at 68%. We just have a lot of money flowing into risk assets right now. Not necessarily the case for Bitcoin, so we're not seeing crypto. But the final thing I wanted to show you, one more slide here. This is breadth. So if we're looking at chip stocks, 93% of them are higher. That's one of my baskets in the month of August. Software, 86%. And then NASDAQ 100 and S&P 500, 70% of stocks are positive. And then if you look at those up more than 10% prediction stocks, 61% are up more than 10 upper stocks, 45. Now,
Please leave your message for
Jeffrey McMurray.
LA, this is Cousin Vinny. Listen, dude, I'd appreciate it if you'd chill with saying things about people in the TCP trading room. Be a better man. Fucking pisses me off. All right, so S&P continues, looks good here. Okay, a little bit after 3 o'clock. I'm your host, Cousin Vinny, coming to you from closingprint.com. I apologize for getting a little sidetracked. We got an ex-member who's being a pain in the ass. It's really pissing me off. I'll focus back on the markets again. Everything is starting to move higher anyway, so take the opportunity to exit some of these positions into strength. Looking good. Meta back up to the highs. I'm going to take a few things off here. Up 50% or better. I'm taking something. I see SpaceX looks pretty good. SpaceX doing well. Whoa, there goes SpaceX. Looks good. All right. S&P doing well. Nice pop on SpaceX. Okay, everything is getting a little bid here for the most part. If your stock is not catching a bid, mark it down in your journal. If it doesn't get something going in the next couple of days, I would let it loose. We're not in the storage business. We're in the moving business, okay? GTO. Oh boy. Everybody having a good day, hopefully. All right. SpaceX looks good. Oh boy. Palantir having a good day. I'm looking to take some off and re-enter on any dips. I have options, so I want to start buying some shares and selling covered calls, only because Palantir, it's a little extended, but I do like it. I want to stay long. I just don't want options so much. I want to sell premium, buy shares, sell premium, sell puts down below. Also sell covered calls overhead, make the best of it. Airbnb. Nice move on Airbnb. All right, looking really good, SpaceX. All right. Thank you. Thank you. We got about 40 minutes to go. I'm sorry, an hour. What's going on here? Am I on pause? That's not right. It's 3:19. Something's not right here. Something is not right. Let me see. I think I think I'm on pause or something. Let's see. Okay, there we go. There we go. Okay, looking good. All right. Yeah, that looks good. Having a nice day here. Good. Got plenty of time left. What's going on here? Something blew up on this site? All right. There we go. Some reason I was on pause. Okay, now we're good. Okay, now we're good. 36 minutes to go. SpaceX going.
CRCA.
And G. WX. IMTX.
BCX.
BCX.
Easy. HUBS.
Okay. Do, 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 do. All right, looking for more upside. S&P.
INHD.
SpaceX looking good here.
SKYH. FIG. LUNL.
we said there were more wave runs.
I think I lost my mic.
for the season than there were on the Patriots in the Super Bowl.
As always, so good.
All right, we got my mic back.
Thanks, Josh.
Come on, we gotta go to the close bell on Wall Street. Don't. Okay.
All right, we got about 3 minutes, 20 seconds to go. All right, nice move here. Netflix.
Investors Business Daily raves about this. Stockbroker.com. And brokerage is pretty crazy. So what else can we say other than trade like a trader, tasty trade?
The purpose of engineering is to unlock performance. This is a hex lamp with hybrid technology that perfectly balances durability, steering power, and non-stick cooking performance.
Okay, S&P turning back up. Apple turning. Netflix at the highs.
Thanks for letting me.
Netflix, good things to come, I think. Cerebras getting a little bid at the end of the day. Cerebras, maybe it'll be up overnight. Two minutes, 20 seconds to go. All right, Netflix looking good here.
Something big.
And that's a wrap. All right, that's it, folks. That's a wrap for me. I got a bunch of stuff to do tonight. Have a great evening, everyone. Take care. I hope you had a good day. It should have been a good day no matter what you were trading. If it wasn't moving today, reassess, write it down, take note. It didn't move today, didn't do what I thought it was going to do. Cerebras is an example. It didn't bounce, so I'll reassess it tomorrow, maybe take some off. Have a good one. Take care. We'll see you tomorrow. Ciao.